Certainly keep an eye and see if there's another day of gains in that sector. Sportswear makers also in focus. We heard from Nike. Will it be the positivity around China or the negativity around the overall story that has an impact on Adidas and Puma? Perhaps it'll be the latter, judging by the opening calls we've seen. And Pirelli in focus as well, Guy. This the tyre maker, of course. Brembo, which is a brake manufacturer. That business has sold its stake in Pirelli, sold its entire stake, or is selling its entire stake. And there had been speculation that these two businesses could combine. So maybe that comes to an end here.
Absolutely. So some single stocks to watch. Keep an eye on what is happening with the energy complex as well. That read across. It does seem as if China feels isolated. Anyway, it is time now for the opening trade this Wednesday morning. Here are the opening numbers out of Europe. The expectation is we're going to see a little bit of upside in the FTSE 100. Does it benefit from the energy complex going higher? Do we see names like Shell and BP doing better off the back of it? There was some evidence of that yesterday. Those names did rise in the session yesterday as we saw crude shifting into a higher gear. The Stock 600 is up by 0.1%. Does seem as if we're not getting that read across out of China, out of the Hong Kong market, into what we're seeing here in Europe in the same way as we did last week. Feels like two very different isolated stories at the moment. The international geopolitical story and what is happening with the Chinese equity markets, which we are seeing through the lens of Hong Kong this week. So there we go. The CAC 40 is open up by 0.3%. The DAX absolutely flat. The IBEX a little bit softer. Credi, what's happening below the surface?
Yeah, Guy, I think it's exactly the points that you touched on. A lot of that commodity complex is feeding the green on the screen you're seeing in the FTSE 100, but also in the Stock 600 as well, which is interesting because you are seeing an outperformance here in the UK, but not to the same extent I think that a lot of people perhaps expected. Your biggest index contributors, Anna, Shell, BP, Rio Tinto, Glencore, Anglo-American. I think we're sensing a commodities theme here, partially as perhaps magnifying the approach that we've seen in the oil space off the geopolitical tensions. Of course, the China read-through is absolutely there. HSBC nestled in there between.
Yeah, interesting to think about how that China story translates into basic resources. We talked about this a little bit in the last part of the programme, but there is this big conversation about how direct that link is when you've got this property overhang still in that large economy. But energy stocks certainly are going higher today, up by more than 1%. This on the back of, as we know, a higher oil price, 74.65 is where we trade on Brent. Looking for some individual stock names and to see what stands out. We've got Process moving higher. That could be a read across from the Hong Kong trade because it has a big holding in Tencent, of course. BP, as we've mentioned, and Total Energies higher. So there is a commodities sense and a Hong Kong higher sense to what's going on here. There is that little strand of read across, if you like. Looking at some of the other individual names, we don't have Puma open yet. I think Adidas is open, perhaps. I might hold off on that one, though. But not showing much risk. Yes, up by just 0.4%. So not too much reaction to what maybe is seen by the markets as a bit more of an idiosyncratic Nike story.
I think you can park Nike at the moment. I don't think the numbers yet. I think the numbers out of China yesterday tell us something, but I think the broader kind of we are going to kitchen sink to a certain extent our numbers. We're going to withdraw guidance. I think feels, as you say, idiosyncratic, and we are waiting to see what the new management team delivers. So maybe that is an isolated case. But actually, I think to the point you've been making, there is a little bit of China read across this morning. We talked maybe earlier on about the fact that China feels isolated at the moment, doesn't feel like it's being impacted by the geopolitical story. But actually, maybe the London market brings those two narratives together.
Yeah, you're talking about the China story in the context of the stimulus that, of course, that we're expecting out of China. But there's also the China overhang in terms of the car sector that we talked about earlier this week. Yep. That continuing to weigh on the German index, to your point, Anna, as well, because that, from just the early a couple of minutes of trading, the DAX is the underperformer, and I would put Spain in there as well. So you are seeing that underperformance. There's a lot going on in the individual stock space. We should probably macro this out because, of course, we are still waiting for ADP data today, jobless claims tomorrow, and then, of course, payrolls on Friday as well. That puts the Fed firmly in focus. Larry Fink was speaking to Bloomberg from the Berlin Global Dialogue, saying the market is pricing in too many interest rate cuts from the Federal Reserve. Take a listen to what he had to say.
I think the forward curve is wrong. Okay. We're not going to see, and I think Chairman Powell said that yesterday. We're going to be patient as we. I think the amount of easing that's in the forward curve is crazy. I mean, I do believe there's room for easing more, but not as much as the forward curve would indicate.
Joining us now for more insight, William Davies, the global CIO over at Columbia Threadneedle. William, a pleasure to have you on the program. Thank you for joining us around the table this morning. I don't think he's taking a very contrarian approach in that the market is perhaps overpricing interest rate cuts. But my question to you is, if the bond investors are thinking that way, how do you play it in other parts of the market?
Well, I'd start off by saying I think that Larry Fink is right in what he is saying. I think there's a lot of recentness bias over interest rates having been next to zero for a long period of time. And if we go back a couple of decades, then we would be used to interest rates much more positive or higher than they have been in the past couple of decades. So I think it's right that we are pricing, or markets are pricing in too many cuts as we move forward. Having said that, if we look at markets, I think it's dangerous to say that if we get those interest rate cuts and if we get sustainability of growth, even if it is slower growth than we have right now, actually that's not a bad environment for markets. If anything, it's the big reductions in rates and then maybe having to raise rates because we've gone too far. That would be something which I think would be a negative for markets, and particularly equity markets as well. And that is something that the Fed should guard against, having to reverse their cuts.
How much of the expectation of that dovishness, though, is priced into the equity market specifically? How much of that has been driving the green on the screen?
Well, I think if we look at equity markets, there's quite a lot of dovishness which is priced in because, if you look, for instance, at the S&P, up 25% last year, up 20% year to date this year. There's a lot of good news which is priced in there. But as I say, if we get that, if we get a slowdown in growth, but actually sustained growth as opposed to recession, then I think the market levels, there are risks out there, obviously, not just in interest rates, but I think the level of the market is reasonable, but certainly we wouldn't expect the rises we've seen last year and in 24 to continue at a similar pace.
William, good morning. Can I ask you about your levels of excitement around the China story right now? As the global CIO, you're weighing up region against region and thinking about where opportunities are. And we've heard a lot from China over the last couple of weeks, and it's lit some real excitement in some parts of the market. You can look at the Hang Seng, the Hong Kong Tech Index. You can look at the Chinese stocks listed specifically in Hong Kong. Where are you seeing room for this to carry on? Because this has been days and days and days now of substantial gains.
Hey, Anna, we're looking at extremes here. We go back a few weeks, and is the Chinese equity market uninvestable, given the deterioration in economic growth, given the lack of momentum within the economy, and of course the tariffs as well. And then here we are, we get some stimulus. We get some stimulus in China, which is greater than the stimulus that we've seen before. And then we see the rally that we've seen in Chinese equities, up over 20%. Over the past week and a half or so. So I actually think it can go further than it is right now. But would we be supporting sustained outperformance in the Chinese equity market over the next few years? Be really careful about that, because if we look at that stimulus, it's more about stabilizing the property market rather than anything else. We expect lower growth in China than we've been used to over recent years. So yes, I see that catch up. But in terms of extrapolating that over the next few years, I'll be really careful about that.
Right. I mean, is there something of a trap here that investors might fall into?
Trap.
Well, I mean,
is
it all done? I suppose is all I mean.
Well,
at risk of unwind,
I would say that it can go further as we get those short positions or underweight positions being neutralised. But I would say don't get sucked into believing that we will get rises of a similar nature going forward. So trap, I would say no, because we're going back. The market is cheap. So I don't necessarily see us going back to the lower levels, but excitement or overt excitement, I'll be wary about that.
What's going to outperform China going forward? What's going to outperform? Yeah, okay, if this is going to continue, which markets are going to outperform?
Well, I look at developed markets. I look at the US market, even though valuations are high in the US market. Right. It's the most dynamic economy. It has the broadest, most diverse.
But as you say, we've already had a massive rally. Hasn't all that already been priced in?
Yeah, but we would. It's interesting if you look at earnings this year. So people say, well, let's look at 2025. We'd expect earnings estimates for 25 to be too high. As we've gone through 24, estimates for 25 earnings have actually risen during the year, which gives us confidence that actually we're going to make those earnings and potentially even surpass those earnings as we go into next year. So I think what we would say is do not expect those 20% or 25% returns that we've seen, but we do expect further positive returns as we move forward.
Is the market underpricing geopolitical risk?
I think that is a real risk for markets. I think that has been a risk over the last year. If we look at what is occurring, particularly in the Middle East at the moment, we'd look back to April and we would look at the missile strikes from Iran then and say, are we underpricing geopolitical risk? Yes. But then the worst didn't occur thereafter. But I still think that there's absolutely a risk out there. Totally agree.
William, let's continue our tour around the world and bring it right here to Europe and talk about the hindrance in European equities right now in terms of seeing the same outperformance here that you're seeing in the U.S. What is the overhang, the biggest overhang in your view? Is it German weakness, the French deficit, the U.K.? Where do you see the biggest obstacle?
So I think if we look at Europe, the largest economy, Germany is really struggling to get out of next to no growth. I think we lack political leadership as well in Europe, with, if we go back a while, Merkel being the political leader within Europe.
Can you trade off that, though?
Well, we just say there's continued lower growth, disappointment within Europe. But you highlight one point there, Kriti, which I think is really important, and that is the deficits. The deficit in France that we're seeing around about 6% or so, and a weak government there. They're putting through measures potentially to reduce that deficit, but will they get through? That remains to be seen. So I think there are real risks within Europe around that lack of political leadership and a weakness there. And we're starting to see, some of the more extreme parties do better. And so what does that bring about as we move forward?
All right, William Davies, Global CIO over at Columbia Threadneedle. We thank you so much. Guy, he makes a crucial point, which is, yes, the deficits are in focus, but can you trade off of them? Is it something that's priced in, say, the underperformance of the French index, among others, for example?
Look at what is happening, though, with the German market. The German market, record after record, despite the dismal economic performance we're seeing at the core of Europe. Talking of the core of Europe, let's take a look at the core six and figure out exactly what is happening with some of the big single stock names we watch here in Europe. As you can see, quite a lot of green on the screen this morning. Novo's up. LVMH is tracking higher. There may be some China read across, actually, in these markets this morning. Ferrari a bit soft. The car sector's under pressure. SML, Schneider, both positive. Nestle a little softer. That's the core. Let's talk about the single stock story more broadly. Joe Easton's here with the details.
So we are continuing to see some gains in the defence stocks following that news yesterday of the attack in the Middle East. We are, of course, waiting to see if there is any retaliation coming. We don't think at the moment there is a sign of that, but we are seeing strength again in Rheinmetall, Saab, BAE and Thales, all of the stocks that jumped late in yesterday's trading. So it's a second green day for those companies. And then in terms of some of the other sectors impacted by the geopolitics, we are, of course, continuing to look at those big oil stocks, BP and Total. Pretty impressive moves higher, given the 4% gain we've seen in crude futures since yesterday. So on a 2-day basis, we're up 4%, and those stocks coming up, and airlines falling once again. Both of these stocks, IAG and Air France, were hammered in late trading, given the jump in the oil prices and the expected impact on airline fuel, on jet fuel. Air France was down 7% almost yesterday, down another 3% today. IAG was down 5%, down another 0.8%. So that continues to be a key theme for those markets. We've also got Pirelli, this one falling. Anna was discussing earlier, this is a big share sale. It is actually a company that is kind of a bit of a competitor in the auto parts makers sector, making brakes and that kind of thing. They're selling a big stake in Pirelli, though, the tyre maker. That is at a discount, so it is coming down around 3% today. Then a really interesting one to bring you is a stock called Wakakemi. Now, this is the best performer across the stock 600 in the opening trade. Now, there is a report that the US is looking to rein in solar imports from Asia, so trying to control that, according to a report out from Bloomberg. And this company, Wakakemi, does actually supply to that industry, so seeing a bit of a boost, potentially reducing the competition facing that company. It's a chemicals company that supplies to the solar space, that one getting a bit of a boost today. We've also got some decent broker moves to bring you as well. I like this one. Rio Tinto is upgraded at Berenberg. They say this has been the problem child of the mining assets over the past decade. They've got a long-term piece out on this today, but they reckon it's got the best cost base versus the likes of Anglo and BHP. So today they are upgrading Rio, saying that that is the best mining company to be buying at the moment. And then finally, banks. It's been a big couple of days for banking research. Yesterday we had Morgan Stanley downgrading European banks. Today we've got Barclays downgrading European banks, and also Exane BNP has a note out on the Nordics and saying that these stocks are also going to be a potential victim of declining rates. So they downgrade SEB, getting my SEBs mixed up. But they've also got a Nordea buy rating, so keep an eye on Nordea over in Finland and also Stockholm. But a couple of banks' research notes out this morning.
Thank you very much, Joe. Joe Easton from our equities team. We've had an eye on what's happening with Adidas and Puma as a result of what's going on at Nike, but let's also keep an eye on what's going on with JD Sports. This is a retailer of fashion based here in the UK, and we had news lines out from them earlier on, 7 o'clock UK time. We got some numbers from the business. They stuck to their guidance, but the stock is under pressure today. The analysts have actually not responded too negatively to the update, saying that the company was able to offer other brands away from the Nike weakness, but still the stock under pressure today. Coming up, we will focus more on Nike. It looks to wipe the slate clean for its new CEO, who is incoming. The company has withdrawn its full-year sales guidance, but is the sportswear giant doing enough to put its best foot forward? That story next. This is Bloomberg.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
Was going to keep Green World Cup. This is a three
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
You mentioned the international strategy and the expansion from ADNOC's perspective. Before we dive into the details of that, I want to ask you a question that I think sparked in a lot of people's mind when they saw this deal cross the finish line, which is, why did the German government agree to this? And I ask this in the context of the fact that we have another major German deal that's seeing a lot of pushback from the government in the financial sector. Of course, UniCredit's stake in Commerzbank. Why do you think the German government said yes to this deal?
Well, for us, this is clearly a step change, transformative deal. It's a large deal. I think it's too early to say that all the approvals have been done. Today just marks a major milestone in our voluntary takeover offer. We are yet to go through the regulatory process, and that will take its own time after the voluntary takeover offer in the market. So I think we have great support from all the stakeholders in Germany. We believe in that market, but at the same time, we need to understand that Covestro is a truly global company. It has significant operations out of its 48 plants in North America, in Europe, as well as in Asia.
The head of ADNOC's downstream division, Khalid Salmin, talking about what that deal actually looks like and the fact that they pursued it for over a year. Yesterday, moved the shares just shy of 4%. This morning, seeing not as much movement in the stock. You are seeing it unchanged at the moment, down 0.4% in other markets as well. But Guy, this was a question that you focused on yesterday, which is why the sudden friendliness in this industry, but maybe not in financial.
It seems weird, isn't it? Because Germany is an industrial economy. And chemicals are a core part of that. So you would have thought that if you were going to defend and be concerned about a particular area, it would be the industrial sector.
Yeah.
London's finance, you could argue Paris's finance, Frankfurt maybe a little bit as well. The banks don't seem to be so core to the German economy. Maybe you could argue it a different way, which is that ultimately the Mittelstand needs financing, and that's the reason why you would want to defend the banking sector. But it just seems slightly odd that you do have this very strong reaction to the Commerzbank takeover by an Italian business. And then we look at Covestro and a very different welcoming reaction, maybe from the German authorities.
Listening to Chad Thomas, who leads a lot of our coverage out of Western Europe, talking yesterday, he was reflecting that there is broader nervousness in Germany, and even the ADNOC executive you were talking to acknowledged that they haven't quite got all of the approvals yet. But you're right that the tone is really different. But Chad was saying there is general concern in Germany that even if some German assets aren't doing too badly, this is a time of weakness perhaps for the German story. And are they at risk of international buyers coming in all kinds of spaces?
The UK is experiencing that.
The UK has certainly had that experience.
But this is the point that the Covestro CEO had made himself, that this is a industry and a company that needs a lot of fundraising. It needs a lot of investment. And I'm wondering if maybe the German government is giving a little bit of a blind eye to this, or is a bit more friendly or amenable to these negotiations because they need the fundraising. Can you say the same thing about Commerzbank?
Let's fold in the cars as well. Maybe you want to think about kind of how we should fold that into the conversation too. The Germans are taking a very strong line on this.
Yeah.
They want to protect the German auto industry. They're worried about the China exposure. They're taking a different line to the rest of Europe, you could argue. Fascinating to see the different approaches that are being taken in all these different industries.
At least Adidas is doing okay.
Adidas, yeah.
talking of German businesses.
You want to talk about what is happening with the stripes versus the tick? Maybe we'll do that. Nike is facing one of its roughest patches in decades. Shares slumping in late trade. Sales missed estimates. It withdrew its guidance. Does any of this really matter? Yes, you're getting a fairly big reaction. Considering we've got a new CEO coming in, our consumer reporter, Dasha Afanasya, joining us now around the table. Why do I care about what Nike said yesterday? Why do I care about what they're doing at the moment? As far as I can tell, they're basically just saying, what's gone before, don't worry about it. What's about to happen is the one you think you need to focus on. This felt like a kitchen sink moment that is clearing the path of the new management team.
I think that's what they want the market to take from this, that don't worry about this, it's all new now. But there was quite a lot of detail that will give investors, a sense of the scale of the turnaround that has to happen, that maybe is a bit scary. So I think that the headline numbers are perhaps neither here nor there. And the guidance, obviously, we always see this, new CEOs coming in, cancelling guidance, because why should they have to be held to what their predecessor has set? But I think in the detail, there are a few things that give you an idea of how much more tough times there are ahead. So, for example, the company spoke of the declines in Air Jordans and Dunks and Air Force Ones as a good thing. They said, this is declining more than the overall as 10% sales decline, because we're actually reducing the supply because we don't want to be reliant on that, because they're not doing very well. But the problem is that other parts of the business and things they've tried to kickstart, for example, the running business, which has grown 4 times in the last year with models such as Vimero 5 and Y2K, it's not making up the difference. So it sort of raises the question of what can an incomer do? And we know that it's a long, tough slog ahead, because the other big aspect of this is rebuilding these relationships that they burnt with retailers, which is a human thing, isn't it?
Yes, so certainly that very much part of the story, and maybe they're sort of turning the tide on that narrative. One area of brightness does seem to be what they're doing in China. I mean, I say brightness, I think sales still declined, but not as much as people had expected. How much do we read into that, Dasha?
Yeah, so the other competitors such as Anta and Adidas are actually up on the news, because China slump has been dragging down the whole consumer goods sector, but particularly apparel luxury. So there are a lot of questions on this in the analyst call, but I did think it was interesting, Nike saying we're still below what we want to do there, we're still below what we planned, but we know we can read across to other companies that maybe things are getting a tiny bit better.
You mentioned that keyword, the read across. Talk to us about what that impact looks like in Adidas and JD Sports, et cetera.
Well, I think we're seeing that it's a Nike-specific problem. There are specific things that Nike did wrong, particularly with the retailers and particularly with not managing the supply of certain shoes very well, and also not spotting trends and resting on their laurels in terms of not seeing these specialist retailers such as On that have been taking market share like crazy. And that's why there was concern that JD Sports, which is one of the retailers that was still holding Nike shoes, would decline and would suffer because of the Nike slowdown, but it beat expectations today, so we are still spending on sportswear.
Certainly something we're going to be keeping a very close eye on. Bloomberg consumer reporter Dasha Afanasya joining us around the table this morning to bring us the Nike story and, of course, the read across into European consumer companies as well. Coming up on the program, we go back to the Middle East. Israel promising a retaliatory attack on Iran. We discuss the latest developments in the Middle Eastern conflict. The director of the Middle East and North Africa program at the European Council on Foreign Relations will join us next. He's had a industrious career, of course, in journalism, but living in several of these regions that are certainly affected. We're also keeping an eye on the latest warnings coming out of southern Lebanon, and of course, live pictures coming out of Beirut as well. We're going to keep you apprised of the conversation and the risks around further escalation from both sides. Stick with us. This is Bloomberg.
news and tech are on Bloomberg.
A large number of countries are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Nobody covers technology like Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome back to the programme. 8:30 here in London. Israel's Prime Minister Benjamin Netanyahu has vowed to retaliate after Iran fired 200 ballistic missiles at the country last night. The barrage started only hours after the US warned an attack was imminent. The Israeli army says many missiles have been intercepted, with reports one person was killed in the West Bank.
Iran made a big mistake tonight, and it will pay for it. The regime in Iran does not understand our determination to defend ourselves and our determination to retaliate against our enemies.
The Revolutionary Guard and Iran's armed forces are ready both defensively and offensively to repeat this operation with multiplied intensity.
Let's get more with Bloomberg Horizon's Middle East and Africa anchor, Jemana Basetchi, who can give us an update. Jemana, I guess we watch now, having heard the words of the Israeli leadership, we watch to see how Israel responds.
That's exactly it. So this is yet another escalation in the Middle East conflict, and it's also the second time Iran has gone for a direct attack on Israel. What we know is around 7:30 p.m. local time yesterday, around 200 ballistic missiles were fired directly from Iran into Israel. Explosions were heard around the country, but the IDF say most of those missiles were intercepted, causing limited damage. There was one person who was reported to have been killed in the West Bank, but that was on back of shrapnel exploding, and they reported 2 other casualties as well cited within Israel. Now, of course, this response from Iran has been anticipated. They've been warning for a month now, over a month now, that they would exact retaliation and go for some sort of revenge attack on Israel to the killing of Ismail Haniyeh, as alongside the most recent killings of Hassan Nasrallah and a senior IRGC commander who was taken out in an airstrike in Beirut last week. And so the retaliation has come now. And in terms of the degree of the intensification, a few experts are pointing out a couple of features that are specific to this attack that differentiate it from what happened in April. The first is this time around it was less telegraphed, so there was less time for the Israeli defense system to be up and running in order to intercept those missiles that came through. But of course, many of them were actually intercepted in the end. The second point worth noting is that these types of missiles were more long-range and specific and faster than the ones that were used back in April. Those were slower moving missiles. There were also drones that were easier to intercept back then. And so those distinguishing features tell you that Iran, in their own way, have chosen to intensify, even though in this case there was no guarantee, of course, of any civilian casualties. But it does mark an escalation point, of course. And key from here is how Israel chooses to respond. Many reports coming earlier from Axios saying that Israel would respond and retaliate in the coming days, and that it would be a significant retaliation. And of course, one way that this could get even further escalated is if they choose to target potential energy infrastructure sites in Iran, or even go one step further and target nuclear sites too. So all of this is up in the air, which is why you are actually seeing, for once, quite a significant impact on some of these global markets, oil markets, this morning.
Yes, absolutely. Just as you're speaking there, and maybe markets are thinking about the substantial potential nature of any Israeli response, and we are seeing oil prices now up by 2.4% just this morning after yesterday's rally. Bloomberg Horizons Middle East and Africa anchor Jumana Basechi, thank you very much for setting up our next conversation. Joining us now, Julian Barnes-Dacey, Director of the Middle East and North Africa Programme at the European Council on Foreign Relations. Julian, so very good to have your thoughts on the programme and your insights. Picking up where we left off with Jumana there, a lot of people are trying to think about what Israel's reaction function might look like here. Do you have any sense of what a significant response might look like?
Good morning. I think we're all playing a guessing game here, but the Israelis have made clear that they are going to respond much more forcefully than they did to the April attacks. And there have reportedly been already some kind of back-channel communications leading up to the latest attack, whereby Israel warned the Iranians that any new attacks would lead to Israeli strikes on energy production sites and potentially also nuclear sites. And I think the Iranians have in kind also suggested that if that happens, they will target wider regional energy sites to try and knock wider supplies offline, noting in their mind that they view kind of the Gulf platforms of energy as being very much interlinked with the US regional posture here, which is backing up the Israelis. So clearly, we're at a grave kind of escalatory moment here. The Israelis are going to respond, and there is a real risk that will push the Iranians to do something else in kind in turn.
Yes, we're jumping ahead a few reactions here, Julian, but interesting to explore how Iran then would respond and what kind or whose energy assets they could target if that's the case. Because I know you've written substantially about the relationship between Iran and Saudi Arabia, and how even if it's been strained, it has been perhaps moving in the right direction, and that could be the secret to some progress here.
So on the one hand, the Iranians have made a big effort over the last 18 months to renew their ties with the Arab Gulf states. They've really kind of engaged in new dialogue. They've mended fences. So on the one hand, they are wary of alienating their regional partners. This is their escape route to get out of or to maneuver around Western sanctions, to build out their economic trade, to ensure that actually these countries can't be a platform for attacks on Iran. On the other hand, that's one of their few kind of deterrence measures, which is that they can say to the West, to the world, to President Biden ahead of the upcoming election, that if we're hit, that if you allow Israel to target our energy supplies, well, you better expect a wider impact on global energy supplies, because we can actually then knock out energy supplies in the neighborhood as well. So I don't think they want to attack their partners. I think they want to use those relationships to actually build out their economic ties and capabilities. But they are now in a defensive mode. They now know that this is one of their few elements of deterrence left. And as they try and push back against a new Israeli attack on their energy facilities, that's one card that they have left to play. We don't know whether they would do that, because if they did that, they would certainly alienate the entire region against them at a moment when actually the region is helping them, where you have countries like Saudi Arabia engaged in dialogue trying to de-escalate the situation. But clearly it's a risk that is hanging out there, and obviously the hardliners in Iran are going to be much more aggressively pushing a position that they think is needed to safeguard their position here.
Julian, how weak do those hardliners look domestically right now? How undermined is the administration in Tehran by what is going on here?
Well, clearly they're significantly on the back foot, and I think last night's attacks were partly a response to that. We've seen Iran and its allies take hit after hit after hit across the region, and even after the killing of Hassan Nasrallah last week, the initial response from more reformist, moderate-leaning elements of the government was to say, take it in, don't respond, and you saw a groundswell of hardline reaction, aggressive responses to that within the Iranian system that I think pushed the supreme leader to take a more assertive stance. And the hardliners were essentially saying to Khamenei that if you don't respond now, the Israelis will just keep on coming after us, and there'll be nothing to stop them actually launching wider attacks on our allies and on Tehran itself. So the attack last night, although not as telegraphed as the attacks in April, was still telegraphed. The Iranians have come out since last night saying, we're prepared to end it here. We can draw a line. We don't want to take it further. So they're trying to prevent a wider cycle of escalation now, but things are out of control to a certain extent, and the Israelis will respond.
But how deterred are the Israelis right now? I'm wondering. The Iranians have launched attacks on Israel to little effect, and I'm wondering, therefore, how effective the deterrence is. Hezbollah has been neutralized in a way that we did not anticipate. The missile strikes, the ballistic missile strikes, are largely being intercepted. How big a deterrence are we seeing here from Iran? How deterred is Tel Aviv?
Well, I mean, my sense is that there's a danger of a strong degree of overconfidence in Israel at the moment. Clearly, they've hit Iran and its allies quite bad, but we had an unprecedented show last night of 200-plus ballistic missiles being fired on Israel. A lot more of those got through, I think, than we're really noting today. And obviously, the kind of Israeli media and military keep those details quite under wrap. We saw that in the April attacks, we were told that nothing got through, and in the end, we found out that a couple of Israeli military sites were actually hit. We also know that Hezbollah has an arsenal of about 150,000 missiles at its disposal, and they have not been using the more aggressive, high-impact missiles since over the last year. They've been holding those back because they and the Iranians have been trying to play a game of showing some support for Hamas, but not actually pushing the Israelis into a full-blown war. And so I think the risk is the Israelis feel confident here. They feel that the Israelis and Hezbollah aren't doing much to them, but actually that pushes the Iranians and the Hezbollah to engage in the kind of steps which would be a prelude to full-blown war, and which would pose a much more significant cost on Israel itself, including the firing of missiles that could actually cause much more damage on the ground.
Julian Screedy in London, we are getting some images from last night out of Beirut, and we're talking simply about what those evacuation plans look like in the south of Lebanon, but also within Beirut itself. You mentioned the Hezbollah story, and I'm curious from a perspective of a regional escalation and a wider conflict. I recognize that the epicenter is, of course, between Israel and Iran, but how much of a role does Lebanon play right now in terms of these, of course, on your screen, the live images of Beirut?
Well, Lebanon's critical. I mean, Lebanon is one of the tipping points. You could see this erupting through direct clashes between Iran and Israel, but it's just as likely to erupt in Lebanon in terms of the Israelis launching a more full-on land incursion, moving up towards the Litani River, bombing Beirut, and that could provoke a more full-hearted Hezbollah response. As I say, they have not used the full power of their arsenal of missiles to date. It could also draw in Iran to offer more full-hearted support for Hezbollah, its key regional ally. So these are two theaters that are both part of the same conflict. Each could act as a tipping point. Iran and Hezbollah do not seem to want a larger regional war at the moment. Israel is talking about the opportunity to remake the regional system. They see this as an unprecedented opportunity to push the Iranians aside. And, you know, sadly, I should say that we've seen these kind of illusions frequently over the last 25 years, since 9/11, frankly, and they repeatedly made the region much more violent and created outcomes much more disastrous than where we started. So I think we should be very worried about these hubristic illusions that one could potentially knock aside the Iranians and remake a pro-Israeli order at this moment.
Julian, you're joining us from the European Council of Foreign Relations. So let's bring the conversation back to Europe's role in what's going on in the Middle East. Do they have a role when all eyes right now are on the United States' part and policies towards both Iran and Israel? Where does Europe step in or don't in this conflict?
So the Europeans have been irrelevant. They have been completely out of the conversation. They haven't made an impact. A key dimension of that has been their inability to have a coherent position on what's happening in Gaza and that conflict. I think it's been quite clear for quite some time that the only way to prevent this wider explosion is to get a ceasefire in Gaza. There have been numerous ceasefires on the table, and frankly, it's been the Israelis who have repeatedly rejected that, Prime Minister Netanyahu. And the Europeans have failed to put pressure on the Israeli government to move towards that ceasefire, even as they've rightly put pressure on the Iranians, increased sanctions, and so forth. I think at this moment, the key role lies with the Americans. Can they put pressure on Israel to control their response? And the answer seems to be no for the moment. There were reports coming out of Washington yesterday that Biden's Middle East advisors are very much behind the Israeli offensive, believing that this can be the moment to reorder the region. And I think the question for the Europeans, much like the Arab Gulf states, is are they capable and willing to take a strong message to Washington, D.C. at the moment that this is a hugely dangerous moment and it has to be prevented, and that the Americans need to lean in heavily on the Israelis and use their outreach with the Iranians to contain the situation. What the Europeans don't have the ability to do is to impose that solution on regional actors, because they are out of the game in terms of influence and leverage on the ground.
Within the IR community, what is the expectation as to how good Israeli intelligence is right now? Clearly what happened in Gaza was a huge blow for Israeli intelligence. What has happened, though, in Lebanon has reasserted the idea that the Israelis do know what's going on in the region. How good is the expectation surrounding Israel's intelligence as to what is happening in Iran and the specificity required to make targeted strikes against the nuclear program?
So I think clearly we've had a demonstration of the absolute quality and advances of the Israeli intelligence network across Iran and its allies. The decapitation of Hezbollah is really a remarkable tactical success. There have been reports coming out of Iran in just the last few days that Mossad has even penetrated the anti-Mossad penetration unit of the Iranian system. I mean, they've penetrated the spies who are trying to root out the spies, so to speak. So I think one can assume that the Israelis have extremely good intelligence, extremely good access, and can continue to impose very significant hits on Iran and its allies. But what they don't seem to have is a strategic plan here. They don't seem to have a political vision or horizon that actually gives them an off-ramp. And I think we've seen that in Gaza, we're seeing that in Lebanon. Israel can hit Iran and its allies in Gaza and Hamas militarily in very emphatic ways. They are unable to create a situation that allows them to guarantee their security demands in a sustainable way. Even if they take Hezbollah back to Beirut, Hezbollah will keep being able to fire stray missiles on northern Israel that will prevent Israelis moving back into the north of the country, which is the declared aim of this incursion. So I think Israel really needs to ask itself, what is the off-ramp here? How and what are we prepared to do to get a ceasefire in Gaza that creates the conditions for regional actors to stand down? And for the moment, the only kind of strategic outlook seems to be what Netanyahu was talking about in the UN Secretary General Assembly last week, a great reordering of the Middle East. And as I say, we see that kind of dangerous planning on multiple occasions over recent decades, and it's never ended well.
Julian Barnstar-Dacey, we'll leave it there, Director of the Middle East and North Africa Program over at the European Council on Foreign Relations. We thank you so much. Coming up later in the program, Bloomberg's Stephanie Flanders will be hosting a panel with the French President Emmanuel Macron at the Berlin Global Dialogue. More on what to expect from that conversation and the governments in Europe next. This is Bloomberg.
about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Minutes into the session, this is what European equities look like. Reasonably calm session thus far. In terms of the sector story below the surface, energy, basic materials and the luxury sector are really where we are seeing the gains here this morning, particularly on the energy front, up by 2.35%. Weakness in real estate, utilities and telecoms, the kind of sectors that get moved around by the rate story. Let's talk about what is happening with Europe's political narrative and where it goes next. And the divisions we are seeing, Chancellor Olaf Scholz, as chief economic advisor, is concerned about Germany's economic growth. Understandably, Bloomberg's Francine Lacroix sat down with Jo Cookies at the Berlin Global Dialogue for an exclusive interview.
It's definitely too low. We are struggling to get positive growth this year. But the more fundamental problem is that we don't only have a cyclical growth issue, we also have a structural growth issue where our growth potential has declined from 2% at the beginning of the century to 0.5% currently. So we're doing everything we can to not only deal with the cyclical issues of energy prices and reducing red tape, but also going at the structural problems like attracting skilled labor to our country.
But so we had a Bloomberg scoop on Monday saying that basically the next German government projection for growth will be flatlined. Is that the case? Can you confirm that?
Well, we have the predictions coming up in a few weeks, so I can't talk yet about them, but I can tell you, you will find out soon what our most current projection is. But I think when you see all of the economists around, it doesn't take a lot of imagination to predict that it will not be a very satisfactory high growth rate.
So you mentioned some of what's the underlying causes of the slower than expected growth. What are the priorities for the government to kickstart growth again?
So we just launched a growth initiative where we have in the key pillars the structural elements that we need to fix. On the one side, incentives for investment and research on the taxation side. On the other side, incentives to attract talent and skilled labor from the rest of the world to come to Germany and to mobilize more of our labor potential within our country. Then there is a big chapter on energy and how we increase the supply of energy to reduce cost, how we invest in billions and even hundreds of billions into the grid to transport all of the newly created energy. So in that sense, we're really going to the core of these structural problems. The last point probably to mention is that we are also accelerating planning and permissioning We did that with the LNG terminals. We're doing that with renewable energy, with grids, with highways, with railroads. So all of the infrastructure investment is also being accelerated.
How quickly do you think that can turn around things?
Well, of course, structural reforms always take a bit of time to work, but we are predicting an increase in our growth potential by 0.4% as early as next year.
Yo, Cookies, Chief Economic Advisor to Chancellor Olaf Scholz in Germany, speaking to Francine at the Berlin Global Dialogue yesterday. Germany is struggling. France is struggling. In France yesterday, we also saw the new French Prime Minister, Michel Barnier, outlining his targets for where debt deficits are going to be going here. He's not going to meet the target of 2027 to get the deficit down to 3%. It's going to be 2029. We're expecting more details, obviously, from the economic picture to emerge over the next few days. I think we could get a pretty big heads up today because Bloomberg's head of economics, Stephanie Flanders, is going to be moderating a panel with the French President Emmanuel Macron. Stephanie joins us now ahead of that. Stephanie, Michel Barnier was outlining tax hikes yesterday for French business. Is the Macron economic experiment firmly coming to an end?
Well, I mean, that's the kind of question I will be asking him this afternoon, because you have to remember, you know, when he came in 7 years ago, you remember at Davos, he talked about France is back. I mean, it just doesn't feel like that today when you look at, you know, the spreads on between French and German bonds higher than it's been since he's been president, and a lot of question marks about the fiscal situation, which has just continued to deteriorate. You have a nearly 6% of GDP budget deficit this year, and as you mentioned, a new government that's delaying or taking, you know, was managing to sort of sound credible with some kind of plan yesterday, but we know politically in a very weak spot. You know, when governments have to make difficult decisions, you kind of hope that they have a mandate and that they have, you know, the kind of parliamentary strength you need to get these things through. And Michel Barnier has anything but that, thanks to the disastrous decision to call that election in June.
Stephanie, I also know making news near where you are, China EV tariffs. That's much talked about generally in German business, I'm sure, but specifically at this forum, perhaps.
Yes, and we had, you'll remember that a year ago I spoke to Chancellor Scholz at this panel, and he said he really didn't want a trade war. We've now got a vote on Friday, EU governments voting for whether those tariffs on Chinese electric vehicles in Europe are going to be passed. And you know, we don't know whether there's going to be any agreement between the French and the Germans on that, but we're going to hear more later, I think.
Certainly something we're keeping an eye on. Stephanie Flanders of Bloomberg Economics, of course, joining us out of Berlin. You can catch her exclusive panel with the French President Emmanuel Macron just after 2 p.m. UK time, of course, live right here on Bloomberg Television. Plenty to watch in the day ahead. You are seeing plenty of data, of course, at 10 a.m. UK time in just about an hour. Euro area unemployment, plenty of data over in the States as well, 115 U.S. ADP, but also plenty of central bank speak from both sides of the Atlantic. The Fed, the ECB, all hitting the wire. In the meantime, European markets, about an hour into trading, are trading in the green. How long does that last? We'll have to find out. That does it for the opening trade. The Pulse is up next. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching the close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Israel vows to retaliate after Iran fires about 200 ballistic missiles that were largely intercepted, saying Tehran made a big mistake. Traders flock to haven assets with gold holding near a record. Chinese stocks surge in Hong Kong on stimulus bets. Plus, the Prime Minister Michel Barnier, the French Prime Minister, delays plans for France to meet its budget deficit target while outlining plans for spending cuts and tax hikes. So, good morning, everyone. It's going to be a very, very busy day on the markets. This is what European markets are telling us at the moment. Now, it's a little bit of a mixed picture. Our Stephanie Flanders, together with Chad Thomas, is over there at the Berlin Global Dialogue. Tom McKenzie will also have some great exclusive interviews from there. She's speaking to Emmanuel Macron. The DAX pretty much flatlining because of all the concerns about German growth going forward. Now, the CAC 40 and the UK FTSEs are having a better day, gaining some 0.5%. Again, the focus is firmly on the Middle Eastern crisis, what a price in oil means for the region. S&P futures pretty much unchanged. We'll have a terrific briefing on the two asset class that are really moving the most. That's Brent crude gaining some 2.2%, but also gold still at a record high or near a record high. And then the big story is that China actually reopened. We saw that massive bazooka stimulus that traders had been waiting for some time. We had it earlier this week, and that's now finally playing out in some of these markets with, for example, BI China Developers Index. This is real estate and property owners. It's an index gaining some 46.2 in today's trading session. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Israel's Prime Minister Benjamin Netanyahu has vowed to retaliate after Iran fired about 200 ballistic missiles at the country last night. Now, the barrage started only hours after the U.S. warned an attack was imminent. The Israeli army says many missiles have been intercepted, with reports one person was killed in the West Bank. So for more on all of this, let's get straight to Jumana Merseche, who's in the Middle East for us. Jumana, how does this Iran attack actually differ from the one we saw in April?
Yeah, it's a valid point to raise, Francine, because this is the second incident of a direct attack on Israel by Iran. The first one, of course, happening back in April of this year. And back then it was in reprisal to airstrikes on the Iranian consulate in Syria. Iran had threatened to retaliate. The retaliation did come in April. 300 drones were sent back then, all of them intercepted. And the interpretation at the time was that the reaction from Iran was mostly symbolic. Of course, you fast forward to today, and the reprisal comes on the back of the killing of some very important figureheads within this axis of resistance. They're responding to the killing of Ismail Haniyeh, who was the Hamas leader that was killed in Tehran, the killing of Hassan Nasrallah, killed last week in an airstrike alongside one of the senior IRGC commanders, also killed in the same airstrike that took out Hassan Nasrallah. So Iran had to be seen to be doing something. And of course, the reprisal did come in the last 24 hours. They sent up to 200 ballistic missiles. Now, the Israeli Defense Forces say that they intercepted pretty much all of these rockets that were fired. There was limited damage. There was reportedly one person who was killed, what is on back of shrapnel. But the key difference this time around is that it was less telegraphed. So there were only a couple of hours heads up that a strike may be imminent. And then also the types of missiles that were fired this time around, ballistic missiles. They were precision missiles. They were concentrated around military targets that were, Iran claimed, were used to launch the airstrikes that took out Hassan Nasrallah, in addition to being faster moving. And so it is somewhat of an escalation in terms of how Iran chose to respond to this form of reprisal.
Jumana, thank you so much for the terrific briefing. Jumana Borsecha there in Dubai. Now let's also talk to Tina Fordham, founder, geopolitical strategist and advisor at Fordham Global Foresight, and then we'll get the market reaction with Laura Cooper. Tina, thank you for joining us. I mean, this definitely feels like an escalation. Mark Champion, though, says it's a strategic error on the part of Iran because they tried to do as much might as they could, but it didn't really go anywhere. Would you agree with that assessment?
I just looked at Mark's piece. I mean, I also wrote that it was expected that Iran would have to retaliate. Israel keeps upping the ante and keeps exposing, really, Iran's vulnerabilities. But the way that we need to interpret the response is that it was significant, but it was focused on military targets. And it falls short, I think, of the threshold of triggering a wider war, and in that sense, it probably ticks the boxes that Tehran needed to, but they are on the back foot.
Do they? I mean, is there? Looking at this, does Iran want a real war, or was it a warning?
Iran has a different geostrategic calculus at the moment than Israel, and this is what I've been underscoring in my research. For Israel, they have perceived window of opportunity to degrade the enemy, their adversaries, Hamas and Hezbollah, Iran's proxies, between now and U.S. elections in 5 weeks' time. It is not a remarkable insight to expect that Netanyahu would prefer a return of Trump to the White House. Whereas for Iran, their geostrategic calculus is quite different. They need to wait it out. It's not a secret that they would prefer a Harris White House, mainly because, and this is really important for your viewers, they would like to see a return of the P5+1 construct, the diplomatic construct. Yeah. So Iran needs to hold the line, not allow itself to be humiliated, and bide its time. With all of this in mind, though, this kind of missile, ping pong that's taking place between Israel and Iran's proxies isn't likely to die down. At the same time, though, the Saudis have increased their production targets, so oil supplies are higher. That's important too. Sorry.
But Tina, I mean, I know it's early reports, but, a lot of the missiles that Iran fired were shot down. Some of them broke through Israel's air defense this time. What does Israel want at this point in time? They talk about retaliation. Are they going to go hard?
I think that Israel's response will similarly try to strike the balance between not allowing a serious attack from Tehran go unchecked, but without going further. Iran and Israel do not want to be in direct conflict. In that sense, they have shared objectives. But it is absolutely in Israel's interests, as it sees it, to do more to diminish the capacity of Hezbollah and Hamas, and taking out the leadership, the decapitation strike, as it is known, is dramatic and causes temporary kind of reduction in capacity, but it's not enough to curtail this risk. And we're heading to that October 7th anniversary, which will be a very somber and probably quite angry anniversary for Israel, and Netanyahu very much exposed for what he has done in the past year.
But Tina, if an Israeli missile strikes back at Iran, if what we've seen in the last couple of days continues in Lebanon, and Iran fights back, I mean, are we going to see a disastrous war with potentially the U.S. drawn in? Like, who's going to really try and mediate this and bring this down?
Well, who's going to mediate it? That is there's nobody with the capacity to do that right now, and Biden saying consistently that it will back Israel almost no matter what, I think undermines U.S. moral authority on that front. But I put it slightly differently. I think as long as these volleys of missiles, serious and terrifying as they are, continue at this pace, going back to what Jumana said, markets won't respond. They're aimed at military targets. They haven't been very effective. I think symbolic is a poor choice of words, but that's what I hear from market participants. The thing to watch for will be if Israel targets Iran's energy infrastructure facilities, and that's a real risk. There's footage coming out of Iran of people, filling up their petrol tanks. Do they know something that we don't know, or are they just being rational actors in a very volatile part of the world?
Tina, thank you so much, as always. Tina Fordham, founder, geopolitical strategist, and advisor at Fordham Global Foresight. Now, we can also speak with Laura Cooper, global investment strategist at Nuveen. Laura, always great to speak to you. It feels like a big market day, but actually the market is not really reacting, it's reacting quite oddly. So we're seeing for the first time it move gold, a little bit oil, but again, it feels like it's at the margins.
Well, and I think that's really just markets' reaction to the escalation in geopolitics. We did see that flight to safety yesterday. Bonds were quite strongly bid. Gold was rallying again to record highs. But I think it speaks to the broader backdrop for markets, that these are markets rallying on the back of aggressive monetary stimulus, or the expectations thereof, and fairly resilient growth backdrops. And some of those could yet to be challenged if we were to see this escalations persist, or if we start to see, inflationary pressures building and central banks don't actually follow through on some of those market expectations.
But Laura, do you think that's right? I mean, markets seem to be, again, it's at the margins, and I know there was a movement yesterday, but looking through some of, the geopolitics, when do they sit up and really take notice?
I mean, it really does depend on whether we see a broadening of the geopolitical tensions, or whether we see a consistent kind of lengthening, or it may become more concerning. I think at this point, we're largely going to see knee-jerk reactions, and it really just adds to this view that we're going to see bouts of volatility in markets. We also have the U.S. election coming forward, and this does suggest to us that you have to have a very defensive and selective up-in-quality positioning in your portfolio allocations.
So where do you put oil at the moment? Is it range-bound? We also have a lot of shale, that from the U.S. that's come on the market, which is a little bit different to what it was like 5-6 years ago.
But it's quite interesting because we're coming off where oil had quite a challenging quarter. We also had Saudi Arabia coming out saying they're going to abandon their price target, which to our mind does suggest that the risks are tilted to the downside. But then you overlay that with geopolitical tensions, and we clearly are seeing oil as the pressure valve for that. So we're likely going to see more range-bound trading around that $75, $80 barrel mark until we see clarity from really both of those fronts, the supply side and as well what we're seeing from the geopolitics.
But diversification is the key, so we'll talk a little bit more. What do you buy in this market?
There's lots to buy. I mean, there's certainly, we're looking at a number of different exposures. Certainly if we look at European government bonds, Japanese government bonds at the long end of the curve, even taking on some of those up-in-quality equities in the U.S., there's certainly opportunities despite kind of the volatility and despite the uncertainty that markets are facing.
Laura, thanks so much. As always, Laura Cooper, Nuveen's global investment strategist, stays with us. We'll talk a little bit more about those opportunities, and guess what? We'll also talk about French government bonds. Now, Nike shares have fallen pre-market after the sportswear giant withdrew full-year guidance. The company also reported a 10% fall in fiscal first quarter revenue, just short of average estimates. You can see Nike down 5%. Much more to come, and this is Bloomberg.
A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
It's definitely too low. We are struggling to get positive growth this year. But the more fundamental problem is that we don't only have a cyclical growth issue, we also have a structural growth issue.
That was Jörg Kukies, the chief economic advisor to the Chancellor Olaf Scholz, speaking to us yesterday on the growth challenges that the German economy is facing. Meanwhile, the euro area's second biggest economy is wrestling to tackle its budget deficit. Now, the new French Prime Minister, Michel Barnier, has delayed a target to meet the EU's budget deficit limit by 2 years. Well, let's return to Laura Cooper, Nuveen's global investment strategy. Laura, I mean, a lot of people have a lot of sympathy for France. I mean, he needs to balance the books. He has a very thin majority, and he needs to do something. But as an investor, does it make sense buying French bonds?
Well, at this point, no. We think there's the political risk premium that's actually baked into French, particularly the 10-year, is warranted. You know, we could see some kind of closure of that boon to oat spread, but even then, only about 60 to 70 basis points. I think it's currently about 75 basis points. Because if we look at kind of what some of the comments were yesterday, yes, they expect the deficit to come at 5% next year, but 2/3 of that expenditure will come from actual spending cuts, and the other 1/3 will come from taxes. But there's a lack of detail on how they're actually going to achieve that. And then throw in the fact that there's likely going to be an election, let's say in the next year or so, and there's too much political uncertainty. So we think, you know, in the near term, we're slightly trimming our underweight to French government bonds, but really the structural challenges preclude us from actually going overweight.
Laura, I mean, when you look at Germany, it's also not doing great. Is there anything that you would buy up in Europe right now?
Well, I think if anything, you know, the German backdrop, yes, it's been challenging for quite some time. We're seeing this kind of broad softness across the European economy. And Christine Lagarde, actually, her comments to European Parliament suggest that they're actually gaining more confidence that inflation could return to their 2% target in a timely manner. So on the back of that, we actually expect the ECB to cut in October and then have consecutive cuts. Now, the market is slightly, you know, a little bit overly aggressive in terms of that, but we still think there's opportunities in taking German bonds bond exposure as a safe haven. We clearly saw that bid yesterday. And then having some of that periphery exposure in EGBs, looking at Spain, Greece in particular, they've actually been strong outperformers. And then as well in the credit space, opportunities in European credit up in quality, particularly in the belly of the curve, is really where we're finding a great opportunity set right now.
Laura, I also want to ask you about the Fed, but this is what Larry Fink yesterday said about market pricing.
I think the forward curve is wrong. Okay. We're not going to see, and I think Chairman Powell said that yesterday. We're going to be patient as we. I think the amount of easing that's in the forward curve is crazy. I mean, I do believe there's room for easing more, but not as much as the forward curve would indicate.
There you go. The forward curve is crazy. I mean, what do you buy in U.S. Treasuries right now?
Well, I think the fact that the Fed pricing does look quite aggressive in our mind. We're anticipating, consecutive 25 basis point cuts through to next June, bringing terminal to about that 3.5% mark. So still kind of well above where the market anticipates. But we're going to see bouts of volatility. Fed Powell the other day said that this is data dependency, meeting by meeting. So we have the payrolls print on Friday. That, in our mind, is going to bring about bouts of volatility. So we're really playing the short end and the belly of the curve quite tactically to take advantage of that, and then staying overall neutral duration, because we think this is an environment where the curve can continue to steepen as we start to think about some of those election risks coming through.
Laura, we're going around the world in like 60 seconds, but Bank of Japan, so we have, a new leader of the ruling party, but he's called an election of October 27th. I mean, this was the place where a lot of investors wanted to be. Are you taking a pause until we know the outcome of the election?
Well, we've been quite reluctant to actually have exposure to Japanese government bonds, with an exception. I think at this point, the Bank of Japan is going to remain exceptionally dovish. Mm-hmm. We don't anticipate the next hike really until December or January. But if we look at just how rapidly the JGB curve has steepened, we think there's actually opportunities looking at the ultra longs there. This really is more of kind of a geopolitical recession risk hedge. There's supply technicals that are quite favorable. So we think there is opportunity there. We don't think that we're going to see this kind of repatriation back to kind of the Japanese bond market. There's a number of factors. U.S. growth exceptionalism is still persisting. Ministry of Finance data still supports Japanese buyers kind of going to the U.S. Treasury market. So I think at this point, it's kind of a wait and see mode, but we really don't have strong conviction that now is the time to kind of reallocate to Japan bonds in particular.
And it doesn't change depending on who's in the White House after November 5th.
I think ultimately fundamentals will continue to drive. It's really just about being very selective. We're going to see pockets of sectoral performance diverge in terms of U.S. equities, but I think at this point, it's really just contributes to the uncertainty that markets are facing, which does suggest more volatility ahead.
Laura, thank you so much, as always, for joining us. Laura Cooper, there, Nuveen's global investment strategist. Now, coming up, Tim Waltz and J.D. Vance go head-to-head in the only vice presidential debate before the U.S. election. Was there a knockout blow? We'll be live in New York next, and this is Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
As we spend some time here on the broader presidential race,
Let's focus in on European politics.
Makes you wonder how politics might play out.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
It was going to keep reading World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Well, Tim Walz and J.D. Vance have gone head-to-head in what's likely to be the only vice presidential debate before the U.S. election in 5 weeks' time. Now, there was a shaky start for Tim Walz as he stumbled early on, but there were no knockout blows. Well, sparring points included immigration and whether Donald Trump lost the 2020 election.
Donald Trump's inability to say. He is still saying he didn't lose the election. I would just ask that. Did he lose the 2020 election?
Tim, I'm focused on the future. Did Kamala Harris censor Americans from speaking their mind in the wake of the 2020 COVID situation?
That is a damning non-answer.
Now let's bring in Bloomberg's Vonnie Quinn, who joins us from New York. Vonnie, so happy to have you on. What were your main takeaways from the debate?
Well, Francine, that part that you just pointed to there, that was probably the most combative part of the night. It was essentially a very convivial almost debate, a traditional type of debate in a sense. We had obviously all of the potential things that could have gone wrong in our heads. Were the candidates going to prove that they were the right choices for each of the top of the ticket candidates? Were they going to make any kind of trouble for their candidates? And would we learn anything new on policy or about the candidates? I think it's fair to say that they passed all the tests, or at least they didn't fail them. And with just 34 days until election day, anything has the potential to make or break a candidate, to sway a potential voter, right? The only new thing we got on policy was actually from outside the debate. Donald Trump was obviously watching the debate, and when it came to reproductive rights, he ended up putting on social media that he would veto any ban on national abortion that came across his desk. That was a big change from the presidential debate, where he said he wouldn't sign one because it wouldn't come to that. So that was interesting. J.D. Vance's big complaint was that Kamala Harris has been in the administration for 3.5 years, and so anything she says she's going to do, she should have already done. But that's a complaint we've heard lots before. So on to the swing states for more, Francine.
Vonnie, thank you so much. Vonnie Quinn there in New York. Now, coming up, iron ore and metals spike on China's stimulus measures. We'll discuss that and much more with Rick Deverell, chief economist and head of net zero at Macquarie. This is Bloomberg.
invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big, with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. Well, Israel vows to retaliate after Iran fires about 200 ballistic missiles that were largely intercepted, saying Tehran made a big mistake. Traders flock to haven assets, with gold holding near a record, but Chinese stocks surge in Hong Kong on stimulus bets. Plus, the Prime Minister, Michel Barnier, delays plans for France to meet its budget deficit target while outlining plans for spending cuts and tax hikes. So Israel's Prime Minister Benjamin Netanyahu has vowed to retaliate after Iran fired about 200 ballistic missiles at the country last night. Now, the barrage started only hours after the U.S. warned an attack was imminent. Now, the Israeli army says many missiles have been intercepted, with reports one person was killed in the West Bank.
Iran made a big mistake tonight, and it will pay for it. The regime in Iran does not understand our determination to defend ourselves and our determination to retaliate against our enemies.
The Revolutionary Guard and Iran's armed forces are ready both defensively and offensively to repeat this operation with multiplied intensity.
Now, oil has extended its gains after Iran's attack. With us now, Will Kennedy, Bloomberg's senior executive editor for energy and commodities. Well, how much higher can the price of oil actually go? I know it's reflecting this renewed risk premium, but actually it hasn't really gone off the rails.
No, it hasn't gone off the rails, but I think the move that we've seen since the attack last night is significant in that it jumped 5%, and importantly, it's held those gains. So I think that it is a signal that traders are recalibrating the risks in the oil market of this widening conflict in the Middle East. But you're right to say that the upside probably is capped, and one of the reasons that that is the case is because the OPEC at the moment has a significant amount of spare capacity. Saudi Arabia, especially in the UAE, could, if we see extreme scenarios play out which disrupt the flow of oil out of Iran, potentially replace those barrels. So the overall market picture is not especially tight, and I think that means that while traders are very alive to the increased risks after yesterday's events, it isn't going to get out of hand.
I was going to ask you, do you think this is going to be short-lived because of, I guess, the risks that's fading of, as you say, these supply disruptions?
Well, I think right now the market is going to be very alive to whatever happens in terms of Israeli retaliation. Clearly, everyone is braced for significant reaction from Israel's armed forces, more so than when we saw a similar cycle in April. And I think one concern is that we don't know what the Israelis are going to target, but one possibility would be oil installations. That would clearly hurt the Iranian economy and be a serious way to respond. And while we absolutely don't know if that's going to be the case, it is a risk that traders are prepared for. So I think we may see some tension in the market until the Israeli response becomes clearer.
I mean, again, if there is an attack on Iran's military infrastructure or oil industry, what does a sustained rally in the price of oil actually look like? Is it impossible to tell?
It's very hard to say, and of course the market is coming from quite a bearish place. We've seen some very bearish market positioning in recent weeks, mainly because of gloom about the Chinese economy. Now, sentiment seems to be turning around on China, and you combine that with a deteriorating situation in the Middle East and a risk to a much wider war, and I think we could see significant upside from here, but I'm not going to be confident enough to put a number on that for you, Francine, I'm afraid.
Oh, well, thank you so much, as always, for your terrific briefing. Will Kennedy there in charge of all of our oil coverage. Now, iron ore prices have surged to a near 3-month high after China eased home buying rules as part of a wider measures to boost the world's second largest economy. Well, joining us for more on all of this, I'm pleased to welcome Rick Deverell, Chief Economist and Head of Net Zero at Macquarie. Rick, as always, thanks so much for joining us. It's been a while since we've seen you on Bloomberg TV, so it's a treat. I mean, it feels like the world is very uncertain. It feels like the global economy was okay. Markets are okay largely because of, expectations of Fed cuts. But what do you do with geopolitics, and how will that permeate through the global economy?
Yeah, I mean, it is interesting in that if you look at the last couple of years, we've had some really big economic shocks. We obviously had COVID, we had inflation, we had the energy shock in Europe. And global growth's been much more resilient than a lot of people, including myself, had feared that it would be. So the starting point, I think, is one of resilience. But of course, there's always the geopolitical issues, and they're very much in focus now. The main impact from geopolitics normally comes through the oil market. So unless you get a disruption in oil, it will be a volatility driver. Clearly, we're seeing some risk premium come into oil markets. But unless you get a physical disruption, the impact on the global economy is probably less than a lot of people would think.
Rick, why do you think actually overall the global economy has been a little bit better than expected? Again, we were kind of talking in the newsroom that we had lower oil price than expected. I don't know whether over the last 8 months that was almost like a natural stimulus for the world economy, plus all the fiscal stimulus that we had also during COVID.
Yeah, so again, I think we came out of COVID much better than people had feared.
Yeah.
Particularly the services sector has been very strong. And I think the fiscal stimulus was part of that, and certainly there was excess savings and people had a lot of money in the bank to spend. I think the oil price has been a bit of it, but it's not actually the biggest component. And particularly with the United States economy, the perversity now is because the US is now the biggest oil provider, most of the increase in global oil supply in the past 15 years has come from the United States. You could argue that a higher oil price is actually good for the US economy. It hurts the consumer, but it boosts business investment. So,
should we worry about debt levels more?
In the US, I'm not terribly worried about the debt levels. I do worry about the level of the deficit. Okay. So when you've got an economy that's at full employment still running a deficit near 7% of GDP, that's historically unprecedented. That's never happened in the United States before. But because it is the US, they've been doing this for a long time, so it's not an imminent threat, but it does raise risks as we move forward.
Do you worry about a U.S. recession? I know everybody talks about soft landing, which in my mind, I'm not exactly sure what that means yet. But it seems, France is certainly going through a rough patch. Germany's even going through a rougher patch. And many question mark about the U.S. economy.
Yeah, so I think Europe is different, and we can talk about that in a moment.
Worse?
Worse,
yeah.
Definitely worse. Again, the US has been remarkable in that we've had this big increase in interest rates. They're still growing above trend. And even though the labour market is softening, it's softening from a stronger point of view. And of course, inflation has come back down towards where the Fed would like it to be, so the Fed is easing. Monetary policy is still restrictive. What happens with Fed policy will depend on what happens with the economy, because they don't really know what neutral is. But you put all of that together, and the probability that you have probably a no landing, not even a soft landing, is looking pretty good still.
When you look at, I guess the race to net zero, I don't know whether we're in a hiatus, whether it's stopped because of the politics, or whether, private companies are slowly just continuing to go at it. It's just not really talked about as it was 2 years ago.
Yeah, so again, it's actually interesting in that there's a lot of discussion, of course, about the IRA and policies in Europe. The really big one at the moment is actually China. So China contributed 3/4 of the increase in global emissions over the past decade. And China's doing enormous things at the moment. So last year, China installed 290 gigawatts of new clean energy capacity. To put that in context, the United States installed 40.
So it is interesting in that, yes, there are challenges. The politics has become more difficult in the West. But in China, they're making very large gains. But we need to keep it in context in that global emissions are still going up. They're going up at a slower pace, which just means it's going to take time.
What does that mean for some of your, some of how long it takes for example, technologies to take hold? Does it take longer than expected, or does it slow down and then accelerate again?
Yeah, so I think the political will is still there, and certainly at a corporate level, every corporate in the world would like to invest in this space. So I'm optimistic that technology will continue to improve. But what I say to clients is we need to focus more on the solutions. We need to focus on decarbonising. We need to focus on building renewable energy capacity and storage. And once we do that, and once we have those clean electrons, the fossil fuels will go away. So we need to keep focused on that. I think the incentives are in place. There are really good things happening. It's just that fossil fuels are such a big part of the energy system and the global economy. You can't turn it off quickly. So I just think it's a process and it will take some time.
But it's also, does it mean that as an investor you have to accept lower returns? And does a lot of this depend actually on who's in the White House come January 20th of next year?
So I don't think investors will accept lower returns. So I think government will have to find ways to incentivise investment and ensure that people get paid for making this investment. And that is happening. That's what the IRA was about. Obviously China's doing it a lot on their own balance sheet. But I think that will be the process, because ultimately, yes, there will be some investors who will take a lower return, but across the board, I think it's unrealistic to expect private capital to fund this if they're not going to make the same return.
There's a big vote, of course, on Friday on the possible tariffs that the EU would impose on China EVs. I caught up with the main advisor to the German Chancellor yesterday in Berlin, and he was pretty tight-lipped. He says, look, we haven't made up our mind. I mean, is there a conciliatory way where actually China can do something on their end so they don't have to have extra tariffs, but they give less subsidies to some of these car makers?
But they could, and that would be a good outcome. But I think this, for Europe, I think this is a really challenging issue, because obviously countries like Europe, countries like Germany, the auto industry is a very big part of their manufacturing base, and China is clearly out-competing them at the moment. We can debate how much that is subsidy-driven. China's exports of autos have gone from something like 1 million 3 years ago to 7 million in annualised terms now. And during that time, global auto sales have fallen, and of course Germany has lost market share. So it's not surprising that the politics is getting more difficult. The problem for Germany, of course, is that their biggest market is actually China. So any of the big marquee producers in Germany, their biggest market is China. So if China was to retaliate, that would be really bad for Europe as well. So it's actually a very difficult political issue.
Will they retaliate? I mean, China, I feel, has domestic issues. So is now the right time? They're already in a trade war with the US. Will they also try and get the Europeans angry? So it's hard to say, but at the margin, I suspect there will be some retaliation. I think it's unlikely they will take it completely lying down. But as I say, it's actually a very difficult one. And remember, if you talk about global EVs, which where a lot of this conversation goes, growth has stalled in Europe, whereas China is still growing very strongly. So 50% of car sales in China are now EVs. So again, there's a big structural gap opening up in these markets, and it's going to be really challenging politics to deal with that. Rick, thank you so much for joining us today. Rick Devereux there. Don't be a stranger. Come back very soon. The chief economist and head of net zero at Macquarie. Now, coming up, diversifying from offices to retail, leisure, and residential. We'll discuss the future of Canary Wharf with the group's chief executive, Shobi Khan. That's next, and this is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Now, welcome back. Sentiment around the European office market has improved this year, but challenges remain for London's Canary Wharf Group. Now, it was recently downgraded by Fitch over short-term refinance, risks and cash flow constraints. Yet there was a show of commitment from shareholders Brookfield and Qatar last year, who also injected £300 million into the campus as it seeks to reinvent itself as a mixed-use neighborhood. Well, I'm delighted to be joined by the Chief Executive of Canary Wharf Group, Shobi Khan. Shobi, thank you so much for joining us. I mean, you've been working at this to making this really to attract more life sciences companies, to diversify away from finance, to make it a more exciting, neighborhood in London. How's it gone so far?
The evolution has really taken off. We started this over 9 years ago in terms of bringing in the residential community. And in the last several years, we've not only added huge biodiversity investments, but made tons of amenities. And to your point, we've started construction on Europe's largest laboratory building.
Yeah, I mean, when you look at, North Quay, some of the things that's going on there, I mean, there's like a space that's like 820,000 square feet, and you didn't have a single occupant. So it must give you, hope that people will come to actually inhabit it and rent it and make good use of it.
Absolutely. I mean, I think Canary Wharf already is home to a burgeoning life science ecosystem. MHN, the regulatory version of the FDA is there. UK Health Security Agency's there, and 2 years ago we opened 40,000 square feet of wet lab space, and that's all leased up. In the last year, we've leased over approximately 100,000 square feet of wet lab space. So the demand is there, and I think, as you know, London just does not have quality lab space in scale.
Do you worry about pricing? Is it, what will attract people there instead of around where Google campus is? I know you also launched Eden Dock, which is this new urban oasis. What do the tenants want to move to Canary Wharf?
In addition to having great space, it's about the place. And so having great connectivity, the site that you reference is right next to the Elizabeth Line station. So connectivity is key. We've got a host of bars and restaurants. And I think most importantly, from Canary Wharf Group's scale, we can provide housing for these corporates that want to be here, access to Heathrow City Airport. I mean, our marketing tagline is "It's all here," and so we're providing a whole ecosystem for those companies that want to be there.
But was it harder than you thought? I mean, I know you've released initial plans for the overhaul of HSBC's tower. I mean, this is no small feature. When is the planning application actually due to be submitted, and how are you transforming the space?
We're on target to submit planning next September, and the idea is be ready to go in late 2027. We've got supportive shareholders in QIA that own that asset. They're involved in the whole One Planet sustainability efforts, and it's great to have them, at the lead of transforming what was a single asset into a multi-use asset.
So I have it on Good Company that this is also where a lot of the young kids like to hang out. But again, the numbers don't necessarily always reflect this kind of new regeneration project. You have about £350 million of bonds maturing in April.
Right.
What do you plan to do there?
We've got a tremendous retail portfolio. And to your point about the numbers, we had 67 million people visiting Canary Wharf last year in our retail centers. This year, we're going to surpass 70 million. So the demand is there, the vibrancy is there, and I think we're in the market right now with our retail portfolio, which I think we'll use to raise financing to pay off the bonds.
So will it get easier? Have you been held back by regulation? Do you feel, what's your biggest frustration right now about?
Well, we joke preset. I mean, it is it's harder to do business in the UK than it is in the US. I think the government's working on planning reforms and all that stuff. It just takes a lot longer to get stuff done here.
So you wish you could have transformed Canary Wharf quicker? Is that a
Absolutely.
right way
Well,
to say it?
the Eden dock that you referenced, that hopefully everyone can now visit, is officially open today, and it's really transforming how urban environments should be viewed and evolved so that they benefit both nature and humanity. That's taken over 3 years to get done.
Well, is there anything that you're looking to sell? Are there assets or things like that to kind of, again, shore up finances or to make sure that some of your backers are happy with your financial position?
No, I think Brookfield and QI are very supportive, as you referenced in the opening remarks. We're constantly in the market. Last year, we sold some affordable housing to CBRIM. We'll be constantly in the market, kind of looking where we can take advantage of either selling assets, bringing in joint venture partners, and growing Canary Wharf.
Yeah. Shobi, how have we changed, actually, the way we work and live since COVID? Have we underestimated the impact it's had on the workplace, or has it always been the same and you're just trying to match Canary Wharf to what people want?
I think people value the outdoors, and I think that's what we've done in terms of bringing nature and the blue and the green to Canary Wharf. But, if you and I had this conversation 4 years ago, people were saying the office is dead. The office is back. Our numbers are growing every week. The office is there. It's how we use the office and how we use the environment around the office in terms of amenities, restaurants, health clubs, that convenience factor. And it's been proven in terms of how nature benefits us in terms of our mental well-being, creativity, innovation. And so I think people want to be back in the office. It's how that office is created.
Paddle courts, why are they booked like 2 weeks in advance? Like it's harder to get a paddle court booking than it is to go to some of the top restaurants in London.
It's an amazing sport. We were very fortunate that we kind of got on that initiative 3 years ago. They celebrated their 1 year anniversary last year, and next time you come to Canary Wharf, I invite you to play a game of paddle.
Okay, who are our other two people?
We'll get them.
Okay.
No issues.
Open for applications. Shobi, thank you so much for joining us. Shobi Kandar, Chief Executive of Canary Wharf Group. Now, coming up, can a new chief executive do it for Nike? Shares fall in pre-market trading after disappointing first quarter revenue. We'll have the story next, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Now, shares in Nike are lower in pre-market trading after sales missed estimates, and it withdrew its full-year sales guidance. Well, joining us now for all of this is consumer goods reporter Dasha Afanyaseva. Dasha, as always, thank you so much for joining us. So is this really the last of the bad news? It just seems to be coming thick and fast.
Absolutely. This is a typical thing for companies to do when your new CEO is coming in. Wipe the slate clean. Why should a new guy have to be beholden to the targets of his predecessor? But the problem with Nike is that they've already acknowledged that the changes they have to make will take a really long time. They have to rebuild relationships with retailers. They have to get a pipeline going of new innovations, and it's all quite tricky. And investors and analysts this morning and last night were saying the other dynamic is a new guy comes in, he has to increase promotional activity, potentially has to increase advertising spend, and that's not going to be great for margin. He potentially is going to bring in a whole new crew of people with him. All of that puts Nike in this kind of wait-and-see mode, and helps explain why shares fell.
I mean, this is such a strong brand. You kind of wonder how we came to this. I mean, I know every time I go to one of the big shops, they just don't have the sizes. Are there any positive notes? Are there any quick fixes?
The positive note here has been China. It did decline 4%, but it was better than expected because, of course, the consumer goods sector, apparel and luxury in particular, has been very worried about that slowdown. So that's had a positive read across even for companies like Adidas and Anta. But Nike itself acknowledged that we're not where we want to be even with that. The other point was they're very clear that they've neglected the runner. They've lost market share there, and they're putting a lot of effort into that. They're running shoes, models like Vomero 5 and Y2K grew fourfold in last year, but that's still not enough to compensate for declines elsewhere.
I mean, JD Sports also was under pressure today, or like Nike's problems contagious?
So JD Sports, there was a worry that Nike's problems would make it miss estimates, but that's not what happened. It even beat them slightly. But it just shows that this kind of malaise, this kind of downbeat mood about these big players and how quickly their market share can be eroded by upstarts like Hoka and On, shows that there's no rest for the wicked.
No rest for the wicked. There you go. Yeah, you're right. I mean, there's the cool trainers that you see around the newsroom on the young producers. Dasha, thank you so much. Dasha Afanyaseva there with the very latest on Nike. Now, later today, the French President Emmanuel Macron will speak at a panel at the Berlin Global Dialogue with our very own Stephanie Flanders, Bloomberg's head of economics and government. Do not miss, of course, this great panel and interview. It's at 2:15 p.m. London time. Up next, Bloomberg Brief with Danny Berger and Manus Cranny in New York. A lot of the focus will be on global markets. A lot of the focus will be on what we're seeing in the Middle East as we watch for any kind of retaliation from this massive Iranian missile attack on the Israeli side. This is Bloomberg.
make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Good morning from our global headquarters in New York. I'm Menace Craney alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
Israel vows retaliation. State-run Lebanese media say planes have targeted Beirut suburbs as the Mideast conflict intensifies.
Iran made a big mistake tonight, and it will pay for it. The regime in Iran does not understand our determination to defend ourselves and our determination to retaliate against our enemies.
The VPs go head-to-head. Vance softens his tone, and Waltz drills in on election claims.
He is still saying he didn't lose the election. I would just ask that. Did he lose the 2020 election?
Tim, I'm focused on the future. Did Kamala Harris censor Americans from speaking their mind in the wake of the 2020 COVID situation?
And it's day 2 of the U.S. port strike. The Biden administration lines up firmly behind the dock workers.
What we want to see is collective bargaining in the best way for the workers, to make sure they get their fair pay, to make sure they get the benefits that they deserve.
Good morning, Menace.
Danny, a very good morning. To understand what happens next in the evolution of equity markets, NASDAQ down 1.5% yesterday, is to understand what a significant retaliation from Israel will be to Iran. We can talk about that through the programming this morning. Stocks are on the back foot. Nvidia was down over 3.6% yesterday. Takes another leg lower this morning. What to do? Ed Yardeni says, do not sell these stocks. This is your opportunity to step in on geopolitical disruption you want to buy. Roll it over, have a look at the bond market. This was the very reaction function. It was down by 8 basis points yesterday in the very first reaction to the attack from Iran on Israel, that news that they were preparing to attack. And that sort of overshadowed the ISM data, contracting the most in 6 months. The oil market is where you're seeing the most reaction, up over 5% in the very first response yesterday. It carries through this morning. The question now is, what will Israel do in terms of the infrastructure, potentially in Iran and their oil production? Danny.
Manus, I think that is the question, right? Is this different than April the 13th, when that attack on Israel by Iran was largely erased from the market's minds just a few moments later? Perhaps when the arguments for it is different, they used twice as many missiles, and Netanyahu's language is much more strong this time around, saying Iran made a big mistake tonight and it will pay for it.
And it's a question of understanding the recalibration from Israel on Iran. Will they go after the nuclear sites? That's what some of the calls were yesterday across the networks. The second issue is, of course, will they go after the oil infrastructure, over 3.4 million barrels a day of production of oil? And the choke point is the Persian Gulf. The pivot shifts now in this discussion.
Well, to your point, oil still under pressure this morning. Tensions did escalate sharply. Just the details on this. After Iran fired about 200 ballistic missiles at Israel last night, the Israel Defense Forces said many of the missiles were intercepted, with one reported death in the West Bank. Israeli Prime Minister Benjamin Netanyahu has vowed to retaliate.
Iran made a big mistake tonight, and it will pay for it. The regime in Iran does not understand our determination to defend ourselves and our determination to retaliate against our enemies.
Lebanon's state-run media at the moment saying that Israel has struck the southern suburbs near Beirut. U.S. National Security Advisor Jake Sullivan said that the U.S. is working with Israel on a response. President Biden reaffirmed his government's backing of Israel.
At my direction, the United States military actively supported the defense of Israel. Based on what we know now, the attack appears to have been defeated and ineffective. Make no mistake, the United States is fully supportive of Israel.
Joining us now is Bloomberg Horizon's Middle East and Africa anchor, Jomana Bersecci. Jomana, can you just take us through what we know at this moment and how Israel might respond?
Yeah, well, another quite dramatic escalation in Middle East conflict yesterday. And what we know is around 7:30 p.m. local time yesterday evening, Iran fired what was expected to be around what was analyzed to be around 200 ballistic missiles towards Israel. Explosions were heard around cities, and the IDF were quick to say that most of the missiles were intercepted. There was a limited damage on the ground, though later the reports emerged of shrapnel having killed one person, 2 other injuries emerging. Now, Iran went on to say that these strikes were in retaliation to the killings of not just Hassan Nasrallah and that senior IRGC commander in the airstrike in Beirut last Friday, but also in retaliation to Ismail Haniyeh's assassination, which occurred over a month ago now. So this has been long in the works. And from Israel's perspective, we heard comments from the Prime Minister, and you just referenced them now, saying that Iran made a big mistake tonight and they will pay for it. And so there is anticipation of Israel's imminent retaliation. It's expected to come in coming days. Axios reporting earlier today that if they do retaliate, it will be significant. And there are many hawks within the Israeli cabinet saying that the retaliation this time around, a bit dissimilar in contrast to the response back in April, needs to be more forceful and perhaps go after more strategic infrastructure within Iran. And when you talk about strategic infrastructure, there are 2 things that come to mind. The first is oil infrastructure, which of course would mark a significant escalation. And the second, if you want to go even further, would be some of those nuclear sites as well. So all still up in the air, but certainly the last 24 hours mark a serious escalation.
We're certainly going after the oil production capacity, Jomana, in Iran. Cuts off the lifeblood, one could say, to a lot of the funding, not just for Iran, but for the proxies. Jomana Bersecci in Dubai. The oil market, as I said, has been spiking higher yesterday and today. The tensions are rising across the Middle East. Trafigura's chief economist told Bloomberg very plainly, nobody really knows how far this can spread. The market, however, doesn't fail to take notice.
The market has gotten very good at forward-solving problems over the last little bit. I think, we've seen really since October when the conflict started that, when you would normally have had missiles going across, a tanker on fire in the Red Sea, the type of heightened tension that we've seen, that oil would be much, much higher than maybe where we are. So I don't know if it's complacency or as much as saying, look, that there are some solvers and we just don't know where this goes.
Will Kennedy joins us on the story. Will, to understand the spike higher in the oil price, it's a very initial knee-jerk reaction. As Jomana was just saying, it's about what happens next in terms of the severity of the response to Iran and whether that oil infrastructure in Iran and around the Persian Gulf comes into a much clearer focus.
That's exactly right, Manus. I think one thing we can say is that yesterday felt a bit different in terms of response to the oil market. In the past, as things have escalated in the Middle East, traders have tended to take it in their stride because they didn't see the prospect of actual disruption of oil industry, oil exports coming out of Iran. I think that risk calculation has changed after last night for exactly the reason you say, is that traders are now having to think about what the Israeli retaliation looks like. Israel has clearly flagged, as we saw a moment ago, that the retaliation will be significant, and there is some speculation that could, although I would stress we do not know this, that could include oil sites, whether that's refineries or oil export terminals, for example. And I think that means that the market is having to think about this a bit differently against a context where a lot of people were positioned very bearishly.
And part of that bearish positioning, Will, is an oversupply of this market, especially coming from OPEC members who are still pumping out oil despite cuts. Saudi warning of $50 a barrel. How do you think about the tension between the pull of higher prices on geopolitics and oversupply in OPEC?
I think this is a really important point, Danny, and the thing that I would add to it is that, yes, clearly we live in a time where oil markets don't feel that tight, and that is what capped increases because of the political situation. But one point that I would really stress is that OPEC also has a lot of spare capacity. If you think about Saudi Arabia and the UAE in particular, in an extreme situation, they could quickly bring a lot of extra oil onto the market. And look, I don't think we're anywhere close to that now. We would have to take something that we haven't even contemplated yet in terms of disruption or military action against Iran. But that possibility is there, and I think that that's one reason why the oil market has not tended to overreact to the increasing tensions between Israel and Iran.
Well, it's a salutary warning from Prince Abdulaziz bin Salman in the Journal, and they go with that in terms of a warning to OPEC Plus and the members on their supply. Will, thank you very much. Will Kennedy, tracking the oil response. Our guest this morning is Sarah Harrison, Senior Portfolio Manager at All Spring. Sarah, good day to you. You say the biggest risk, geopolitical risk, all day long. Do you recalibrate, or do you wait to see what the significant response is from Israel? Do you have time to recalibrate?
Yeah, absolutely, and a great question. So oil energy is a huge part of the high yield market, which is where I tend to spend most of my time. Energy represents about 10% of the global high yield market. So a spike in the oil price will be impactful for what we see in our underlying companies. You know, the commentators that you had on this morning have balanced the two competing forces very, very nicely. So you've got, on the one hand, the escalation that occurred yesterday, and then on the other hand, we are in an environment where there is oversupply in the oil market from OPEC members at the moment. And so I think that is what has capped the price move upwards. Certainly, in the event of another escalation, we could see another spike higher. But for the time being, we are watching and waiting carefully to see what the next moves are, so as to not overreact to the first move.
Sarah, just to be clear, you're seeing this as something that specifically has an impact on oil. Are you seeing it as something that may dampen risk appetite and flee a bid into havens, or does this look more like April 13th, where it is a fleeting moment and risk on can resume?
Yeah, so I mean, it's certainly, when I think about what the high yield market has done this morning, we're about unchanged to flat. So we haven't yet seen a big price move downwards as a result of this escalation. But things can change very, very quickly, as we all know. And so, we are still trundling along in the fixed income market, but we do have to be cautious and be aware that this is something that is sitting on the sidelines. I will say, though, in the high yield space, we are sitting on pretty high coupons. So the issuance that's occurred over 2022 and 2023 in the European high yield space and the U.S. high yield space, think coupons like 7, 8, 9, 10%. And so that gives you some carry cushion for the potential for volatility going forward into Q4.
Sarah, beyond high yield, as you say, I mean, it's had the best start to trading in 5 years, in decades at the start of this year. But we've got a global regime shift, haven't we? We've got China at play, the ECB 90% probability of a rate cut, and the Fed doing jumbo rate cuts. This is a regime shift. How does that translate then to the rest of the bond market for you?
Yeah, absolutely. We think this is a great time to be, involved in fixed income. There's been obviously a direction change with regard to what the central banks are doing, and that direction change, depending on what your view is on the steepness of how rates move, could be super, super positive for bonds here. Our view is that the steepness of the trajectory going forward is perhaps not as steep as what is being priced in, but you can't ignore the direction of travel, and the direction of travel for rates is lower. And so our expectation, and it's been well telegraphed by Chair Powell, what the baseline is for the rest of the year, with the potential for higher cuts in the event that the market deteriorates or the data deteriorates. And so, we carefully watch the data and see how we go.
One piece of data that has just been outstanding, Sarah, has just been the issuance. September alone, $600 billion globally of U.S. dollar bonds. That is by far a record in a month. Do you look at that and say, okay, corporates, they are feeling great, they're feeling confident in the world, or is it a hurry up and issue before something turns worse?
Yeah, so earlier this year, there was a lot of talk about the maturity wall in the fixed income space and this growing set of maturities in 24, 25, and 26, and a worry that corporates would not be able to refinance these maturities. What we've seen is that corporates have very much been able to tackle these maturities, and in our view, the buildup of the maturity wall was corporate treasurers being savvy and waiting until the last minute to refinance their low coupon debt. When I look at the new issuance that we've seen over the course of September, I'm very positively inclined that there's been a lot of net new issuance. And so we are seeing new money come into the high yield market, which means that transaction activity is picking up, more LBOs, more M&A, which is healthy for the overall market.
Sarah, really wonderful to get your thoughts this morning. Thank you so much for joining us. That's Sarah Harrison of Allspring. Coming up, Waltz and Vance square off on stage. We're going to discuss what they got into, their strategies, all of that coming up next.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
One thing that Joe Biden did is he continued some of the Trump tariffs that protected American manufacturing jobs. And it's the one issue, the most pro-worker part of the Biden administration, it's the one issue where Kamala Harris has run away from Joe Biden's record plan, but it's also a record. A lot of those same economists attack Donald Trump's plans, and they have PhDs, but they don't have common sense, and they don't have wisdom.
Well, Kamala Harris's day one was Donald Trump's failure on COVID that led to the collapse of our economy. We were already before COVID in in a manufacturing recession, but 10 million people out of work, largest percentage since the Great Depression.
Vice presidential candidates, Senator J.D. Vance and Governor Tim Walz, there facing off in last night's VP debate. Joining us is someone who not only stayed up to watch it, but has been up ever since. It is Bloomberg's Vonnie Quinn. Vonnie, tracking the reaction. Thank you so much for joining us this morning. I'd say one of the more remarkable things is that this probably doesn't even rank in like the top 2 most impactful events yesterday.
Well, we don't know yet though, Danny. There are 34 more days to go before actual election day, and anything has the potential to sway a voter, right? So it may to us have looked fairly, you know, non-eventful, but there might be some voters out there who took away something from this debate. That said, you know, your hypothesis is probably more likely than mine. It was pretty uneventful, but that said, they didn't fail any of the tests. I think the tests going into it were, would they disappoint their boss? Would they be considered the right choice? Because there were question marks around both of them and whether they should be chosen. Would they create trouble for their boss, right? Would they have a problem that the top of the ticket would have to deal with after this debate? Doesn't seem likely. There were 1 or 2 gaffes, of course. At one point, Tim Walz said that he had befriended school shooters when he misspoke. He meant to say that, you know, he had befriended the families of some of the victims. But ultimately, no huge gaffes. And as you can see, it was very convivial, friendly almost debate. There were handshakes before, there were handshakes after, and both candidates did introduce themselves as well to the public. J.D. Vance talking about how his mother had been addicted to opioids and is in recovery, and Tim Walz apologizing to those who were missing Dancing with the Stars for the debate.
Well, I mean, if you look at some of the headlines that have come out, Politico say it was a very Midwestern debate and there was a lot of charm in it. Now, I think in our story it says Vance managed to sort of shave off some of the hard-line reputational edges. And I like what you said when we were chatting a little bit earlier, is that, you know, he almost seems a lot less weird, you know, using that phrase from Tim Walz.
It almost came across as if that was the intended goal on his part, right? That he was to come across very reserved, very quote-unquote normal. If you look at the Bloomberg Morning Consult poll that just came out of swing states, you see that people saw J.D. Vance as, yes, younger and healthier, but also dangerous and weird. Now, they're not qualities that you want people to think of you in terms of, right? So it was very clear that he didn't want this weird thing to come up. And bear in mind, it was Walz that coined this phrase about the ticket in the first place. So he definitely moved away from that. And at certain points, Walz did try to bring in this word dangerous, especially when it came to the Middle East and, you know, J.D. Vance's current boss, Donald Trump. But he shot that down and said no, that Trump had been a stabilizing figure.
They also touched on Middle East politics, too. And it's something that Vance talked about, saying Trump was a peacetime president, and you haven't had anyone like that. So there's the sense that maybe yesterday Iran firing 200 ballistic missiles into Israel kind of feeds into that narrative. Now, President Biden did speak about it yesterday. Let's just take a listen to that.
At my direction, the United States military actively supported the defense of Israel, and we're still assessing the impact. But based on what we know now, the attack appears to have been defeated and ineffective.
Now, Vonnie, earlier in the week, or over the weekend, I should say, Biden did say he would be speaking to Netanyahu. How does this color what we're likely to expect from that?
He said he would tell us when he had spoken with him and what he had said, but obviously things have changed ever so slightly since the attacks yesterday, the almost 200 missiles fired on Israel. So we won't know until President Biden tells us what that conversation was, if it actually happens. What we do know is that President Biden has a lot on his plate at the moment, not just this potential for escalation in the Middle East. He's also dealing with Hurricane Helene, and later today, he'll be going to South Carolina, followed by North Carolina. Surprise, surprise, they're also swing states, but he will be making visits to further swing states later in the week as well, Michigan and Wisconsin and Georgia. That also will be, you know, Kamala Harris's journey as well throughout the rest of the week. I do want to point out that that was the first question that was asked at this debate. Both candidates did say that Israel has the right to defend itself. J.D. Vance also mentioned that if Kamala Harris were going to fix this, that she's been in the administration for 3.5 years and she should have done so already, but that was his response to most things.
And Biden was very emphatic yesterday on the press calls. He used the word 3 times, fully supportive of Israel and an intensive planning between the nations. Vonnie, great coverage. Off you go. Get a little bit of sleep. That's Vonnie Quinn, tracking politics live for you here at Bloomberg this morning from New York.
top names in business are on Bloomberg.
The challenge for us now is not very much on the product, it's on the ramp-up of the production system.
We turned the industry down to almost zero during the pandemic. And what we're trying to do now is turn it all the way back on. And that's hard. We lost not only people during the pandemic, we lost a tremendous amount of experience.
A lot of skilled people have left the industry. We have to hire new people. The supply chain has to hire new resources and train the people, educate them.
And because those roles are filled now not by a 58-year-old, but perhaps by a 28-year-old, there's a lot we have to do in terms of not only adding capacity, but capability to meet the ramp that we all are embarked upon.
We have thousands of suppliers, and when you have just a couple of them, few of them that are late on the ramp-up, well, that's slowing down everybody, and that's what we've been facing earlier this year.
Nobody covers business like Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Let's get you some front page news, a look at what's making headlines around the world. First up on Bloomberg, we have this. KKR is considering a takeover bid for the roughly $5 billion semi-equipment maker ASMPT. They've approached them with a non-binding agreement to take the company private. It's at its prelim stages. It does follow acquisition attempts from other bidders. All of that according to Bloomberg sources.
Up next, we go with the FT. Russia takes strategically important town in east of Ukraine. The victory paves the way, I should say, for further advances as Kyiv's forces struggle to increase their manpower and secure long-term Western support. Danny.
Wall Street Journal leads with this. Nike stumbling amid a glut in Jordan sales. They're also telling Wall Street to reset their expectations. They didn't issue a outlook. Managed shares down 5% in the pre-market.
It's interesting. China actually did a little bit better than they'd anticipated. I mean, they launched those would you pay $1,000 for a pair of Jordan?
No. Absolutely not.
Okay, neither of us are in the market for $1,000.
I don't play basketball. I don't think it's for me, you know?
I think it's more fashion than it is anything. Anyway, China wasn't as bad as everybody presumed, ironically, but they did spend, what was the number? $1.2 billion on demand creation over the Olympics. There you go. Get your shoes on.
What would you say somebody young who's watching this should do if he or she aspires to be like you?
There's one component of our industry that people need to focus on, and it's not technical, and that's communication skills. Focus on being a phenomenal communicator, invest in that. Think about it, we have to convince a company to sell to us. You just don't walk in and buy the stock or tell them, yeah, you're for sale, I'll pay you this price. That takes years of relationship and effort. Why would somebody sell you that billion-dollar software company growing at 20%? Just because? No way. People hang on to these great assets. And then how do you get on the same page with the executive team of that company, even if they're existing or new? It requires just amazing communication.
If you go to a cocktail party and somebody comes up to you and says, I have $100,000 I'd like to invest, what do you would recommend that person do with $100,000? What do you think is a good idea to do with $100,000 today?
Sometimes they do, and I give them the most boring answer ever. S&P 500.
Just buy an index.
Buy the index. You don't have to worry about the quarterly earnings of a company. Did something change? Did somebody change management? You don't have to make this your full-time job. Just buy the index and you're going to be okay.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
Israel vows retaliation. State-run Lebanese media say planes had targeted Beirut's suburb as the Mideast conflict intensifies.
Iran made a big mistake tonight, and it will pay for it. The regime in Iran does not understand our determination to defend ourselves and our determination to retaliate against our enemies.
VPs go head-to-head. Vance softens his tone and Walz drills in on the election claims.
He is still saying he didn't lose the election. I would just ask that. Did he lose the 2020 election?
Tim, I'm focused on the future. Did Kamala Harris censor Americans from speaking their mind in the wake of the 2020 COVID situation?
And it is day 2 of the U.S. port strike. The Biden administration lines up firmly behind the dock workers.
What we want to see is collective bargaining in the best way for the workers, to make sure they get their fair pay, to make sure they get the benefits that they deserve.
Danny, good morning. Take it away on these markets. I mean,
Yeah.
a VP debate is almost like second-tier news at the moment.
And like maybe not even second, maybe
Okay.
third or fourth down the line. When it comes to the market reaction, yesterday, first it was about the data, labor market data seeming to suggest more softening, but then geopolitics takes center stage. Interesting to just look this morning to see what's sticking. Some of the risk off, equity is lower. Yes, some of the losses were paired yesterday, but we are still down pre-market, 0.2%. Oil still up sharply, 2%, 2.75% higher. We're at $71 a barrel on NYMEX crude, but we're just at the high of a month ago, basically, when geopolitics were the same as what they are now. So just to temper some of the moves there. The thing that is indeed reversing, Manus, it is yields. Yields were down sharply yesterday, both on that labor market data and concerns of geopolitics, with Iran firing some 200 ballistic missiles into Israel. But this morning, yields are higher by 2.8%, which begs the question, have we already baked in the lowest we can get for yields, considering we're pricing in something like crisis-era cuts?
Yeah, I mean, look, when you look at that shift in the 10-year government bond, it dropped like a brick yesterday on the announcement that we were expecting this attack from Iran with ballistic missiles. Here we are this morning. We're now trying to understand what a calibrated response would be, what an escalated or a significant response from Israel on Iran would be. Would that be potentially, at the worst scenario, to their nuclear sites? Maybe it is a degradation of their oil infrastructure, the refineries. They pump nearly 3.4 million barrels a day. That's what they produce on a daily basis, and that's the lifeblood to them and their proxies.
Yeah, and even just this time, Netanyahu's response is different.
Yes.
Last time around, in April, he basically said, I'm convening a war cabinet, and Israel has the right to respond how we want to. This time, he said very clearly that Iran made a big mistake tonight and will pay for it. That was also a feature of the debate, I should say, last night. Even though we joke, it was maybe tier 2. It did happen.
On any other day, I think it probably would have been number 1.
No, you're 100% right. But we have to talk about this because, I mean, it might be the last debate before the election. Vice presidential candidate Senator J.D. Vance and Governor Tim Walz faced off for the first time and last time on the debate stage.
One thing that Joe Biden did is he continued some of the Trump tariffs that protected American manufacturing jobs. And it's the one issue, the most pro-worker part of the Biden administration, it's the one issue where Kamala Harris has run away from Joe Biden's record plan, but it's also a record. A lot of those same economists attack Donald Trump's plans, and they have PhDs, but they don't have common sense and they don't have wisdom.
Well, Kamala Harris's day one was Donald Trump's failure on COVID that led to the collapse of our economy. We were already before COVID in a manufacturing recession, but 10 million people out of work, largest percentage since the Great Depression.
Let's bring in Bloomberg executive editor Michael Shepard on this. Mike, what was just your takeaway from last night?
Well, it was a strikingly different debate than the one we saw between Kamala Harris and Donald Trump last month, which was marked by such fiery exchanges. Last night was a much more civil and staid affair. The two candidates were respectful of each other, and they focused their attacks on the tops of their respective tickets. J.D. Vance was aiming his fire at Kamala Harris, basically saying, why does the vice president deserve 4 years in office as president if she has spent the current term not addressing all these current issues that we face on the economy, on border security, and on foreign policy as well. And then for his part, Tim Walz returned to the Harris argument that Trump is not fit for office and even invoked the former Trump advisors who have turned against their old boss. Now, what was striking also was that J.D. Vance managed to sand down some of the edges that we have seen surface on social media and in the many interviews that he's done on television. Likewise, for his part, Tim Walz came across as a little bit more nervous, a little less polished, and maybe a little less seasoned than Vance in the public spotlight.
Yeah, it certainly seems to be the consensus. We just had Vonnie Quinn with us, is that Vance came across perhaps as a little bit less weird and really turned on the charm, according to Politico. Let's talk about the other big issue that we're tracking here, the political fallout from the port strikes so close to the election. We talk about the economic impact. The Biden administration has made it very, very clear. I mean, Biden went to the picket lines with the auto workers. Now is not the time for the ocean carriers to refuse to negotiate. So Biden making it clear where he stands.
Well, industry groups, I'm glad you brought this up, Manus, because in that context, because Biden has tried to present himself as the most pro-labor president in U.S. history, and we're seeing signs of that yet again. He is now siding very clearly with the dock workers in this labor dispute. He has refused so far to enact any of the powers that he is allowed to use to force negotiations and force those workers back to the job so that we don't experience a kind of supply line ensnarements and difficulties that everybody fears could result from this strike. Instead, he is putting the onus on the ocean carriers and on the port operators to sit down and offer the kinds of wage increases and also promises on automation that the workers are seeking.
Yeah, I mean, again, remarkable he's using that price gouging language when it comes to what he calls the foreign ocean carriers. Mike, just quickly, before we let you go, Iran and Israel took center stage last night, not necessarily the debate. President Biden over the weekend had said that he would be speaking to Netanyahu, but that is, of course, before Iran launched 200 ballistic missiles towards Israel. What can we expect in a conversation between the two?
Well, more broadly, we're going to be looking at all the diplomacy that will take place between the U.S. and Israel and other parties in the region to see if they can keep this situation from getting further out of hand. And one of the big risks, of course, is that we see this retaliatory cycle start to repeat itself. If Israel strikes back at Iran hard, will Iran feel some pressure at home to return the favor, and so forth. So what the Biden administration, the president in particular, and his advisors will be doing will be trying to keep this from getting out of hand. Yeah. Biden's relationship with Bibi has been frayed a bit, so we will be watching to see how effective that will be. He has not been able to push the Israelis close enough to the bargaining table to actually get a deal that would lead to a ceasefire either in Gaza or in the north in Lebanon against Hezbollah.
Well, Michael, his commitment to the situation yesterday was apparent, fully supporting Israel, and of course, a full engagement. Let's see where it goes to. David Shepard there, tracking this story. Joining us for a little bit more on this escalation in the Middle East is Anna Rosenberg, head of geopolitics at Amundi Asset Management. Anna, I just wondered to what extent we're using phrases like significant escalation. But for you, when you look at this, I want you to assess the differential between what happened in April and where we are now, because the landscape is fundamentally different. You've got a ground invasion and a hot conflict now between Israel and Iran.
Yes, so I wouldn't say that when we compare the missile strike last night to April that it's fundamentally different. Yes, it was bigger in the sense that there were more ballistic missiles. Yes, it was unannounced. It had to be bigger, but it was still a careful measure on Iran's side in order to avoid further escalations. Iran has no interest right now in entering a direct war with Israel for internal political reasons, also because they're very keen on resuming talks with the US to achieve sanctions relief. So we are still in a more significant escalation scenario, but we are not in an all-out war scenario yet. It is a tit for tat. And critically, it is now, how does Israel respond, right? That is the game changer question.
And I mentioned this early. The language Netanyahu is using is different this time. April 13th, on that day, he basically said, we're going to assemble a war cabinet, didn't make too many comments. And then after that, his statement to the public was Israel makes its own decision on how to retaliate. This time, Anna, it's not necessarily saying, hey, we're justified in retaliating. It's, we are going to retaliate. He said, quote, Iran made a big mistake tonight and we'll pay for it. Does that tell you that this type of response this time around will be more escalatory and will be something that markets should be paying more attention to this time?
Yes. So let's look at where we are right now. At the beginning of the Hamas conflict, there were 3 steps from the Israeli perspective when it was about reducing the threats that they were facing in the region. First, there was the need to destroy Hamas military capability. Secondly, there was the need to destroy Hezbollah military capabilities, and this is what we're currently seeing. And thirdly, and there's a question mark behind there, there's the issue of reducing the threat coming from Iran via the axis of resistance and via its nuclear capabilities. We are still at stage 2, where Israel is focusing on containing Hezbollah. This is significantly, it requires a lot of resources from the IDF to focus on that. Nevertheless, you are right. I think it is a lot more likely that Israel will strike Iran now. The question is, how do they do that? Again, it will likely be a measured response that will avoid a big all-out war. That will require the IDF to be overstretched and will most likely cause the US to get more directly involved.
So this is twice that you've used the phrase, this is not an all-out war, it is a tit-for-tat response. Therefore, would you rule out attacking oil infrastructure within Iran and their nuclear sites? Because that is a major escalation if that is where Israel goes to.
Yes, so I would rule out attacking oil infrastructure in the short term. I would not rule out attacking nuclear infrastructure. I think we could get close to that. However, I think there are other targets that Israel could target, military infrastructure, for example, some government sites, for example, to instigate popular uprising, if you will, because as you remember, Netanyahu issued a statement recently to the Iranian people, in a way saying, you know, we need you guys for regime change. So these are issues that I think are a little bit more likely in the short term than oil strikes. On the nuclear strikes, I think that is a bigger question mark here too, because you can argue that this right now for Israel is a beautiful opportunity to strike, because clearly they are overstretched and they need help from the US in any case to strike those nuclear facilities. And given that they are overstretched and that they have the firm commitment from the US to support them, it could indeed be the moment that Israel and Netanyahu has for a long time been aiming for in weakening Iran significantly.
So Anna,
and in that case,
yeah, and if I can just jump in, because I want to get into the market reaction. You can kind of address what you're saying too. Stocks sell off, risks sell off, bonds are bid, oil goes higher. Does that mean that all of that was justified? What are you telling your clients of how they should approach these markets, given everything you're saying?
So clearly there's a lot of uncertainty. Nevertheless, I think the market is still very much operating in the base case expectation that it remains more or less contained and doesn't spiral out in an all-out war. And I think right now that is the right thing to do. When we're looking at oil specifically, there's on the one hand, there's oversupply. And for real impact on oil prices to materialize, you'll need to see a couple of things playing out. Firstly, you would need to see Israel attack oil infrastructure in Iran, which I don't think is the most likely response, as I said right now. You would need to see Iran attack Saudi oil infrastructure, or you would need to see some disruption in the Strait of Hormuz. None of these issues are very likely right now. So what we have seen in relation to the markets is that all the geopolitical pressures have increased the appeal of safe havens, of gold, and that I think is very much according to what is currently happening.
Anna, really wonderful to get your thoughts on this this morning. As always, Anna Rosenberg of Amundi Asset Management. This is Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Why should I want to invest in the pharmaceutical industry? Is it going to continue to grow as it did last year? And what about your own company? Do you think it's going to have good growth prospects over the next couple of years?
I think the reason to invest in the sector is the science. I mean, when you look again, if I go back into the history, for most of the last century, we were only giving people pills and small molecule drugs. Then we discovered that we had this whole world of biologics, and we could treat diseases with biologicals. More recently, we've discovered that we can reprogram your cells. We can edit the genome. We can use these RNA therapeutics to completely transform areas of medicine. Those technology areas are at their very nascent stage. And what we're going to find is they're going to open up whole new areas of growth from our business standpoint and a human health impact standpoint. We hope that as we work in our areas like cell therapy and RNA therapeutics, we will also be able to climb to a whole other level of market cap over time.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
It's your Bloomberg Brief. I'm Danny Berger alongside Manus Cranny in New York. So the private equity investor General Atlantic has acquired investor Actis in a bid to grow its portfolio in sustainable infrastructure. The deal officially being announced this morning. I am pleased to say that joining Manus and me is Torbjorn Caesar, chairman and senior partner at Actis, a UK-based infrastructure investor. Torbjorn, really wonderful to speak with you this morning. So this deal, $97 billion in firepower now between you and General Atlantic to get infrastructure deals done. What is going to be your #1 priority going forward?
Great. I mean, it's great to be here. Now, as you said, it's good with some good news in these times. So, yeah, we closed yesterday, combining the firms and sitting here in our London office and looking forward to welcoming our GA colleagues all to celebrate this afternoon here. I mean, I think that if you look at it from our point of view, infrastructure, sustainable infrastructure, our focus will remain focusing on, should we call it, most of the world, not rest of the world, but most of the world outside US and Western Europe, where 85% of the world population lives, where you have 2/3 of all the opportunities in infrastructure, while you have only 1/3 of the capital chasing those opportunities. You know, the 2/3 are busy chasing the opportunities in US and Western Europe. So I think, you know, we're going to continue to focus on that from an Actis point of view, but being part of General Atlantic as a platform, I think we're stronger, and we will be able now to offer a variety of risk return products to our LPs, all the way from, say, more tech growth investing up to maybe more our space in terms of boring, stable, contracted, inflation-protected infrastructure. So very exciting.
Sometimes the boring delivers very solid results on an ongoing basis. There's nothing wrong with a pipeline or indeed delivering on a constant basis. Look, there's you in this market, as Danny says, just under 100 billion bucks combined entity. BlackRock and Microsoft are launching a $30 billion fund. Is there a frenzy of bidding for assets? How would you describe the asset market that you're going after right now?
Yeah, I would say that, you know, the whole infrastructure space is growing, the alternative asset space here, and, you know, and it's consolidating. And I think that is driven by the LPs wanting to have a variety of risk return products. You can offer a solution rather than just selling, you know, a certain product to them. You know, if you're looking at therefore, you know, what we are focusing on, stressing what I said here, 2/3 of the opportunity set is in most of the world, the non-US, non-European part of the world, and you have less capital chasing that, and that's where we are focusing. I think there has been some frenzy in terms of having that 2/3 of opportunities chasing 1/3, 2/3 of the capital chasing 1/3 of the opportunities in US and Europe. But I think from our point of view, the need, you know, where the sun is shining, the wind is blowing, to, you know, build critical infrastructure across Latin America, Eastern Europe, Africa, Asia is massive. And in one way, we actually need more competition and more capital and competent people to come in. So I think it's a good space to be in, obviously.
I know you're focusing away from the U.S., but such a big factor of this is the U.S., with more tariffs threatened by a possible Trump administration, nearshoring to Mexico, which, by the way, China is going to as well. If we get a Trump presidency, does it change your strategy at all?
No, I don't think it does. I mean, I think that if you're looking at the big political, spectrum, and you can say that election is some uncertainty around that. There is significant uncertainty around the sad events that you just reported from here in the Middle East. You have Russia's invasion into Ukraine. You could also argue the China-US relationship. So all these things is a global backdrop. But fundamentally, people need critical infrastructure. You do need access to energy, electricity, reliable, affordable, and increasingly important green infrastructure. You need access to digital infrastructure, the whole AI digitalization. And I can say that there is also an opportunity coming up here, as you say, with the nearshoring in Mexico. So the whole change in the supply chain, you can look at that from Southeast Asia, Eastern Europe feeding into EU, or Mexico into the US. I mean, that creates real opportunities. And clearly, we have invested heavily behind that and doing, industrial parks in Vietnam or big solar projects, across these markets.
Torbjörn, before we let you go, I mean, you've touched on it, which is the power needed for AI, the data centers. It's one big theme. You see ADNOC doing a deal with Exxon. Are these the kind of deals that you're going to go after, which is infrastructure for carbon capture, infrastructure involving hydrogen, or how do we drill down in the rest of the world?
Yeah, I mean, I think that, there is an enormous need, at the first place for data centers in the parts of the world that we are focusing on. And I think teaming up here with General Atlantic, we will then be stronger, specifically in this space of digital. We build infrastructure. They have a connection with many of the clients for that digital infrastructure. And there are many examples of that, how we can grow that together.
Okay, well, we wish you well with that. Indeed, as you say, a lot of it beyond the shores of the United States of America. Come and sit down with Danny and I next time you're in New York. That is Torbjörn Caesar of Actis. Coming up on the show, we'll set you up for your trading day. We got a little bit more jobs data on deck. Context Matters from New York every morning on Bloomberg Brief.
Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Watching Bloomberg Brief, Danny Berger and Manus Cranny in New York. Let's get you set up for your trading day on this Wednesday. We're going to get more economic data. ADP numbers come out at 8:15 a.m. Eastern. Then Tesla auto sales will be released. That happens before the bell. We're also going to get some more Fed speak. We will hear from the Fed's Hammock, Musalem, Bowman, and Barkin on deck all throughout the day. Manus.
Yeah, Tesla. There you go. Let's see what they're delivering. A couple of stocks for you to watch. Nike, we talked about it a couple of times this morning. Down 5%. Post-earnings decline. They withdraw the full-year guidance. They want to give the new CEO the time to transition in. China just wasn't as bad as they thought, but Chevron down up 1.4%, gaining alongside the other European energy and defense stocks. This is on escalation risk. Oil is up 5% now, net over the past 2 days. What will Israel's next move be on Iran? RTX also a little bit better bid there, up 1.65% this morning. Danny.
Risk still a bit weaker this morning overall, Manus. Oil is still higher, as you're noting. But talking to Anna Rosenberg of Amundi this hour, she's basically saying, look, the market is treating this as if it's not going to be an all-out war, and that's the right posture to take.
Yeah, her language was tit for tat. It's not all-out war. And it's very interesting because she draws the analysis. She doesn't think that Israel will go after the oil infrastructure. But again, we need to debate then if they did go after the nuclear infrastructure, is that escalation or opportunity for Israel?
Yeah, look, it's certainly going to be on the mind of all investors today. That's it for us. Surveillance will take you through the next few hours.
Institutions you've been very philanthropic with is your alma mater, Harvard. But recently, you've been very public about your criticism of the way Harvard handled the events of October 7th and their aftermath. Could you talk about that now?
The first reaction of a group of 34 Harvard student clubs on the morning after October 7th was to put out a statement saying that Israel was 100% responsible for the acts of Hamas. And my view on that was, that's ridiculous. You can come out and say, look, I'm very unhappy about Israel's how the treatment of Palestinians in the West Bank, or you can say, we can talk about the Gaza Strip, but you can't support terrorists, and particularly terrorists that rape and pillage and murder and burn and take hostages. Well, I got actually a text from a CEO in my industry. He's like, Bill, you know the people at Harvard. I'd like to know who the students are behind these clubs, so I make sure I don't inadvertently hire them. And so I tweeted out that sort of made that point, and caused a bit of a firestorm, and I got a lot of pushback. Why are you picking on students? And I said, look, you can't hide behind a corporate entity if you're going to support terrorism.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Stocks have been benefiting from this whole view that rates are going lower.
As much as the data becomes more and more muddy, there's a risk that continues or even exacerbates over the coming months.
While we're not expecting a significant slowdown now, we do think you're coming into a third quarter low.
We do think that the economy is much stronger than people expect.
The upside opportunity here is tremendous.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Your trading day starts right now, live from New York City this morning. Good morning for our audience worldwide. Your equity market, the losses continue. We're down 1/3 of 1% on the S&P 500. A bit of risk aversion gripping this market in the last 24 hours. Some mixed data in America and some escalation in the Middle East. The biggest one-day loss on the S&P 500 in around about a month. On the Russell, Lisa, we're down again by 3/4 of 1%.
It's a two-pronged issue. On one hand, you've got geopolitics really raising the specter of some sort of broader disruption and potentially a pop in oil prices that could challenge some of the soft landing nirvana. But we also got some employment data yesterday that I thought was really interesting. The JOLTS data, the headline was good. You look beneath the hood, the quits rate was the lowest going back to 2020. The hires rate, similar. When you got the ISM manufacturing, a similar type of trend when you look at the employment figures. So on the margins, just a little bit more of that weakening momentum.
Let's go with job openings. This was from Andrew Honhorst. Actions speak louder than openings. Hires, quits, and layoffs tell a clearer story of businesses still trying to reduce labor costs by pulling back on hiring. Andrew, by the way, as you might have heard, is looking for 70,000 on payrolls Friday.
So this, to me, really goes to the heart of the uncertainty around the data. Some people saying, well, every business wants to post as many job openings as they possibly can, basically flood the zone, see how many people they get, and it doesn't actually represent how much demand there is. But if you look at people's moves, their feet mean more than what kind of openings are posted. That said, to me, the real question is, are people overly pessimistic about an economy that still is growing if you look at the Atlanta Fed GDP at a pretty fast rate? And is this market more prepared for a downturn than it is for actually a no landing or an upside surprise to economic data?
I'm still struggling to adjust to all of this. I'm sure you are at home. Bramo on the edge of bullish over the last few days.
Hold on. No, I'm saying
almost there, on the brink, on the precipice.
Don't malign me. Don't put me in that box, John. Look, to me, there's a question of just how this market is positioned. I'm less interested in calling the longer term and just saying it seems like people are prepared for the Fed to cut aggressively in the face of ongoing weakening. Whether that happens, I think if that doesn't happen, there could be a disruption.
The biggest difference right now between, I think, bulls and bears are layoffs. Layoffs right now are still really subdued. Neil Dutter, Renmac, waiting for layoffs to turn means the Fed is willingly falling behind the curve. Layoffs are still low. Will it remain that way? Let's turn to another theme. Crude right now. 2-day winning streak. Crude's waking up to what's happening in the Middle East. Crude is rallying once again this morning. Brent up by 2%. WTI up by almost 3%.
And Jake Sullivan yesterday, the president's national security advisor, said the term fog of war was invented for moments like this. And that is what the market really was able to touch yesterday. You saw this immediate increase in oil prices, 5%, knee-jerk reaction, absolute recalibration, what we saw from Iran to Israel. Now they're holding on to those gains, but there feels like there's a cap on these oil prices because of the spare capacity that's in the market, whether or not you look to Saudi Arabia or UAE. The spare capacity is there, and China's not picking up that demand that we used to see.
Brent crude at 75.50. We're up by about 2.6%. The cross-asset price action looks like this right now on the S&P 500. Equity futures down by 0.33%. In the bond market, yields higher by about 3 basis points. The 10-year 376.19. Coming up this hour, we'll catch up with Jim Bianco of Bianco Research in the no-landing camp. Norman Rall of CSIS as Israel vows to retaliate against Iran. And Rob Casey of Signum Global Advisors following last night's showdown between Vance and Waltz. We begin this hour with the recent rally firmly on hold as the world awaits Israel's next move. Investors keeping one eye on US labor market data ahead of payrolls on Friday. Jim Bianco of Bianco Research writing, "I'm still a no-lander," meaning I see the economy as okay, not even showing signs of a soft landing. I can debate whether we are seeing much cooling in this labor market. Jim joins us now for more. Jim, good morning and welcome to New York.
Thanks for having me.
Lisa went through the job openings. You look at what's happening with the quits rate. Quits rate's down. Look at what's happening with the hirings rate. Hirings rate's down. Why do you not see that as a sign of a slowdown in this labor market?
If you look at the bigger picture of the numbers, they are down from, say, July or June, but the bigger picture over the last several years, these are still numbers that are very constructive for the labor market right now. If you want to expand out from the JOLTS report to payrolls to the household survey, those numbers look pretty good. Now, the one number that is weak has been the rising unemployment rate. But the Fed likes to use the phrase increase in labor supply, which is a euphemism for migration. We're getting more people coming into the country. The population growth rate in the country right now, according to the CBO, is pushing a 30-year high because of migration. And a lot of those people that are coming into the country are unemployed, and that's what's getting picked up in the unemployment rate, which is why that number is rising. That's not necessarily a sign that people are losing jobs.
The 2-year at 360 doesn't scream no landing. 10-year at 376 doesn't scream no landing. What's your view on this bond market?
You know, I think that at 360 on the 2-year note, it is priced in pretty much the Fed cutting rates all the way to say 3 to 3.25. That's in. 2-year note shouldn't go anywhere else. Wall Street is really on this idea that we're going to see a curve steepening. I guess I am too. But at this point, that's a bearish trade because we're going to stay at 360, and the way you steepen the curve is the 10-year yield has to start to rise from here. I don't see the 2-year note going, say, under 3% unless you make the case the economy's really falling apart and the Fed is going to cut rates well beyond, say, 3%, down to around 2% or lower.
I love when people say I'm a no-lander, I'm a soft lander. It's sort of like saying I'm a flat earther, but there's sort of a question here about what that means. I mean, going forward, does that mean that there just is no recession, or does that mean that there actually is a reacceleration from here of growth and inflation?
You know, you brought up a really good point because I've criticized the soft landing camp that it's this thing without a definition, so in a year I'll define it and tell you I was correct. I think a no...
You do the same now?
Yeah, well, I think a no-lander scenario is if you accept that potential GDP, what would the economy grow without it being stimulated or restrained is around 2.5%, 2 to 2.5%. I think that's the no-landing camp, is that we continue to grow at the 2 to 2.5% camp. Also, if you wanted to throw inflation in there, I am in the sticky inflation camp that the long-run inflation rate is probably closer to a 3 handle, if not a 3 handle, then down at 2.0%. Where the Fed thinks it's going to be. So if you add in the two together with nominal GDP, 2.5% real growth, 3-ish% inflation, you're talking about 5.5% nominal GDP, and that's where, the no landing idea comes.
How much does being a no-lander sort of hinge on this idea that authorities are ready, willing, and able to come in and step in, whether it's rate cuts, whether it's the bazooka we guys just got from China, whether it's potential fiscal stimulus in the United States, despite the deficit that people care about but aren't necessarily pricing in?
Oh, I think that, the no-lander camp, if I define it the way I do, it's all of those things give me worried that we don't need the Fed to aggressively cut rates. We don't need massive fiscal stimulus. And if we're going to get it, what we're going to do is we're going to produce more inflation, and probably second half of 25. And that's really the biggest concern right now is, are we going to overstimulate? Because in the no landing camp, we don't really need that kind of stimulation, but so it looks like we're going to get it anyway.
You said you're going to take the over of the Friday's payroll report of 150K. Do you just immediately have to then slash 60, 70,000 off of that because of the revisions we continuously see?
Yeah, that's usually what happens. I think 25 of the last 31 months, the payroll report beats Wall Street's estimate. and then the revisions come in. And it's almost to the point now where people have been more and more asking me is, what's your guess on revisions as opposed to what's your guess on the payroll report? Revisions, I think, are getting overstated a little bit, that usually when they run in cycles, the revisions. Up until 22, the revisions were mostly upward, and since 22, they've been mostly downward. And so I don't see the revisions as being some kind of dark secret thing that tells us that the economy's in trouble. But yeah, I probably see that the revisions will pull back on the numbers that we saw in July and August. But the headline number, you know, like I said, most of the time it seems to be.
When we get the next payroll report, the following one, when you look at what happened in October, we're going to have Hurricane Helene's impact and also the strike workers at the ports. How difficult is it going to be to really extrapolate the labor data?
Oh, yeah, and don't forget the Boeing strike, too. And so I heard Mike McKee say this the other day, and there is a possibility of a negative payroll report coming up. The payroll survey week is the 13th. If these strikes keep going in disruptions into the 13th, and we find that, getting things back to normal after Hurricane Helene goes more than 2 weeks, we could see this start to impact jobs. Remember the way the jobs survey works. They have a company report. If the company doesn't have power or it's closed and it doesn't report, they put them down for 0 this month. They'll pick it up next month, revise it, and you could see a big dive in the numbers. Hurricane Harvey, we saw that last 2017 in September. We saw a negative payroll report off of that when it hit Houston.
Anna Wong of Bloomberg Economics, later this hour. Anna's put some numbers on this. If the strike lasts more than 2 weeks, we estimate the knock-on effects could lower October payrolls due the 1st of November by as many as 80,000 jobs. They think that's going to lead the Federal Reserve to cut interest rates again by 50 basis points, if those numbers actually materialize. Where are you on the Fed's move, November 7th?
That's going to be a difficult one, because if we were to see that type of number, and that's just off of the port strike, we still got the Boeing strike, we've still got the hurricane, and maybe disruption from the Middle East coming as well with energy prices. It's going to muddy the water for the Fed. It's going to make it very, very difficult to try and discern what is the economy doing. Yeah, we know that there's this port strike. Yeah, we know it depressed jobs, but we also know it's temporary. That the port strike will eventually end and things will eventually return back to normal. It's going to be very difficult for them. I think Powell set up the case for 25 at a couple of days ago when he spoke, in that seems to be more of the prudent action, especially that it's 2 days after the election, and there's a reasonable chance we won't know the outcome of the election by November 7th as well.
Jim, it's good to see you here in New York too. Thank you, sir. Jim Bianco there of Bianco Research. Just touching on the Middle East there. More on that in just a moment. Brent crude this morning up by 2.8%, 75.61, with an update on stories elsewhere this morning. Let's get your Bloomberg brief and cross over to Danny Berger. Hey, Danny.
Hey, John. Less than a month after its big Glow Time event, Apple is already preparing for its next product launch. People familiar tell us that they are preparing to announce a new low-end phone early next year that will also be alongside upgraded iPads. The new iPhone SE, it is codenamed V59. It will become the new entry-level model. The release will mark the first update to the SE since 2022, when Apple added 5G capabilities to the device. Bloomberg reporting that KKR is considering a takeover bid for chipmaker ASMPT. People familiar tell us that KKR has made a non-binding prelim approach, and it will take the Hong Kong-listed firm private. Considerations are at an early stage. They might not lead to a transaction, but may attract interest from other buyout firms. ASMPT posted its biggest intraday gain in more than a year on that news. And Lisa spoke to Bridgewater's Karen Caranold-Tambor at the Bloomberg Volatility Forum.
The economy is basically fine. There are some worries about it, might be a little above, a little below, but the Fed is willing and able to make sure it doesn't get worse than that. And that combination is usually a great backdrop if you're just sort of saying, is it going to be a good time to take risk? That's a good time to take risk.
She went on to add that bonds are back to being good growth protection, and they are serving their role in a 60-40 portfolio. And that's your brief, John.
Danny, thank you. More from Danny in 30 minutes. We got to the bottom of the mystery. Bit of Bridgewater rubbing off on Bramo yesterday afternoon.
Hold on a second. Wait a second. Pause. Every single person who I talked to said at the volatility conference, everyone was looking for downside protection. No one was looking for upside protection. Everyone was looking for ways to put on the steepener trade. No one was talking about a flattening trade. Nobody was talking about the potential for a strong dollar. Everyone was short. When you start looking at those crowded positions on a tactical basis, I understand the argument from a contrarian perspective of how the other side might be a
so
little
now
bit
you're
more
just
disruptive.
contrarian, just to be very clear.
Yeah, I mean,
Okay,
it's just
good.
basically which side of the boat. If everyone's on this side, I want to go on the other side.
Lisa's on the other side of the boat. You all know now. In line with Max Kettner over at HSBC. Up next on the program, Iran attacks Israel.
At my direction, the United States military actively supported the defense of Israel, and we're still assessing the impact. But based on what we know now, the attack appears to have been defeated and ineffective.
The latest news out of the region up next, live from New York City this morning. Good morning.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
The slide continues. We're down another 0.4% on the S&P 500, and the rally in crude picks up as well, up by more than 3 on WTI, $72 a barrel. Under surveillance this morning, Iran attacks Israel.
At my direction, the United States military actively supported the defense of Israel, and we're still assessing the impact. But based on what we know now, the attack appears to have been defeated and ineffective. And this is testament to Israeli military capability and U.S. military. It's also a testament to intensive planning between the United States and Israel to anticipate and defend against the brazen attack we expected.
So here's the latest. Israel promising retaliation after Iran fired nearly 200 missiles at the country. Israel saying most of the missiles were intercepted with the help of U.S. forces. The attacks killing one person in the West Bank. Bloomberg's Jemana Besechi, helping us lead the coverage out of the region, joins us now. Jemana, what is the latest this morning?
Yeah, I mean, just another round of escalation in the Middle East. At 7:30 p.m. local time yesterday, nearly 200 of those ballistic missiles were fired from Iran into Israel, triggering Israel's air defense system. Now, IDF said pretty much all of those missiles were intercepted, caused limited damage in the end. One person did lose their life, but that was on back of exploding shrapnel. With Iran State TV actually saying that the strikes had targeted important security and military sites. So that's what was being presented back home. Now, of course, from Iran's perspective, they had been warning for several weeks now that a retaliation was forthcoming, not only after the assassination of Ismail Haniyeh in Tehran, but more recently after the killing of Hassan Nasrallah in those airstrikes in Beirut. And alongside that airstrike that took out Hassan Nasrallah, by the way, you also saw the killing of a senior IRGC commander. So they've taken multiple blows to key figureheads within this axis of resistance and had to show that they were going to be doing something. And of course, that response did come in the last 24 hours. Now, it does mark an escalation versus the first time Iran launched a direct attack at Israel, and that was back in April. This time around, the missiles that they used were ballistic missiles. They're more precision guided, they're more long range, a bit more high tech than the sort of slower moving drones that they moved back in April. And also, crucially, there was less of a heads up this time around versus the incident back in April. Now, we just heard, you played some comments from the Israeli Prime Minister, Benjamin Netanyahu, who said, Iran made a big mistake tonight and it will pay for it. So today, the question is, what form of reprisal is going to come from Israel? Many within the Israeli cabinet are pushing for a more hawkish response, but the response could come in multiple forms. It could be strikes at particularly military assets, like what happened back in April, but it could take the form of further assassinations, even potentially striking energy infrastructure. And if they want to go one step further, this would be obviously a severe escalation, strike nuclear sites as well.
The escalation continues. Jemana, thank you. Jemana Basechi there. Joining us out of Dubai this morning, Norman Rule joins us now, the former senior U.S. intelligence official. Norman, as we know, over the past few weeks discussing these events together, Israel has demonstrated superior defense, superior intelligence. They've done so repeatedly. A question I heard Peter Cheer ask over at Academy Securities, why would they stop now? Norman, why would they stop now?
Well, good morning. It's a limited capability. The shark closest to the boat. A variety of different issues. They're fighting an insurgency in Gaza. They've begun a long-term, what could be a long-term conflict in Lebanon. Operations against Iran would require a tremendous amount of intelligence, a very heavy strain on the logistics of the military, and would also require extremely close and coordination with the United States. The United States that is unwilling to ignite a new conflict in the Middle East. So I don't think it's a question of stopping so much as a question of coming up with a Goldilocks style attack. You want something that deters Iran, demonstrates to Iran Israel's capability, sends a message to the regime, but does not ignite that conflict that would require such significant U.S. support.
Norman, we heard from Secretary Austin yesterday on Twitter. He put out a statement following his conversation with his Israeli counterpart before the attack. And he said, we discussed the severe consequences for Iran in the event Iran chooses to launch a direct military attack against Israel. Well, Iran did, and it was twice the size they did in April. What is the list? What is the menu of consequences this administration is willing to take on Tehran?
That is unclear and likely something that is the subject of some debate within the administration. Secretary Austin's comments were also reflected in the statement by the National Security Advisor, Jake Sullivan, who also used the phrase severe consequences. But for Washington, an administration at the end of its tenure, an election underway, a process of unwillingness to involve itself in external conflicts, the idea of starting a war in the Middle East is going to be at the bottom of their list. The question becomes what can be done beyond symbolic sanctions. And this is important because we saw things happen yesterday, but we didn't see two things. First, we didn't see Iran's other proxies pile in with the Iranian attack, which will tell Israel's generals this is an opportunity to perhaps spend more time in Iran. But also importantly, the U.S. military presence in the region, which included a powerful offensive capability, did not deter Iran. Now, Iran changed its tactics. It did something very different from April to get around that presence, but the offensive potential of that presence did not appear to play a role in Iran's decision-making. And the administration will have some difficulty changing that absent a military strike. One comment on Israel's possibilities: there are cyber options, there are a variety of options that could be undertaken, but Israel is unlikely to strike energy areas that are going to touch the global economy. There are parts of Iran's energy structure that only impact Iran. There are parts of Iran's military that only touches their their external power projection. So there are a variety of different targets in Iran that Israel could touch that would not impact the global economy.
Norman, I'm looking at a map right now of the U.S. military presence as of the start of this month, October 2024. Bases that they've operated in the last 15 years, but also naval deployments. What does our current force posture say about potentially what more we can expect from Iran?
Well, we have about 30,000 personnel distributed throughout the Middle East, and all of those personnel, their bases, would be targets, potential targets for the Iranian retaliation for any U.S. involvement. So U.S. policymakers should consider what would happen to those bases and what it would mean for the countries that host those bases if the U.S. did participate in an attack on Iran. The naval presence is extraordinarily robust and also includes some of the most advanced aircraft in the history of the planet. Our F-35Cs, F-22s, F-18s, F-16s, A-10s. We've rarely sent such an array of air power to any spot in the world as we've got now sitting in the Middle East.
Norm, how much more power does Israel have at this point versus Iran because Hezbollah has been dampened? Or is that a fiction? Is that basically the theory that is driving some of the potential attacks that you don't see as really accurate?
Well, Israel has a significant amount of power that has not been used. It has a missile component of its own. Its air force is very, very impressive and very capable. But again, they've got the Lebanese conflict underway. They've sent additional ground forces into southern Lebanon to root out Hezbollah bases. They're undertaking attacks with their air force on weapons caches and command and control sites throughout northern Lebanon. They've got other duties besides Iran. And when you're thinking about an attack on Iran, that's a distance issue, and it's not just one strike. You're not just dashing east and dashing back. If you need repeated strikes, that involves refueling capability. You have complications with airspace over Iraq and Jordan. This is a serious operation to be undertaken. Israel can do things, but it would require a lot of planning. And again, coordination with the United States would be paramount.
We always appreciate your insights, sir. Valuable. Thank you. Norman Rule there, former senior U.S. intelligence official. One thing I can tell you regarding the market, crude, one of its worst months of the year so far in September. October waking up big time. Two-day rally, WTI up 3% this morning.
Because of the prospect of what Anne-Marie mentioned, that potentially Saudi Arabia's oil assets could be targeted. That said, and I think that it was really good to hear from Norm there, how much is Israel really willing to do that if it ends up creating a difficult situation for some of the allies?
How insulated is this commodity market with oversupply? On the same day we saw those attacks yesterday, HSBC cut their outlook for crude. We'll come back to that in a moment. Equity futures right now negative a third of 1%. Up next, Rob Casey of Signum Global Advisors on the key takeaways from last night's debate.
the Vivian Tom clientele.
Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, they are like in the 20s, so it's a more affordable price for them. And then, my powerful women's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Equities trading just a little bit softer to kick off Q4. We're down again by 0.25% on the S&P 500. Negative yesterday, biggest one-day loss in the last month or so. On the Nasdaq 100, we're down 0.25%. Some of the pain really concentrated in the small caps. The Russell, Lisa, down 0.75%.
On the heels of what we saw out of yesterday's JOLTS report and ISM, not the headline numbers. That was actually better than expected on both fronts, albeit still in contraction for manufacturing. It was in the employment component. The fact that quits rate had fallen to the lowest going back to 2020. Think about it this way. If you're in a job and you feel confident enough to voluntarily leave said job to go to another job or pursue some sort of hobby in your life, then the job market is doing pretty well. And if you don't, that is what's raising red flags for a lot of people.
A lack of confidence right now, and you see it in the hiring rate. You take out the pandemic, we're talking about a level we haven't seen going all the way back to 2013. What we're not seeing, layoffs. That's where the big debate is right now in the labor market on Wall Street. That's the equity picture. Here's the bond market story. Turn the page. 2-year, 10-year, 30-year. The 2-year right now, 362. The 10-year, 376. Yields up just a little bit, but yesterday was this classic risk-off, risk-aversion story.
That actually might be the most interesting aspect of yesterday, the fact that it was risk-off because of the jobs data came out, and then you had what happened in the Middle East, and that continued and turbocharged some of the flight to a haven asset. The fact that bonds were considered a haven in the same way that they had been in the past was notable to a lot of people in a time when that wasn't the case not so long ago, maybe a month or 2 months ago. So that's actually something to watch. How much are bonds still the equilibrium, the flight to haven trade in some sort of crisis?
This all happened in a 1-hour space of time yesterday morning. The data dropped in America. At the same time, we got some reports we're about to see escalation in the Middle East. And crude woke up after being asleep for the whole of September. The worst month of the year so far for WTI. We leave that behind and we rally up another 3% on Brent, up by more than 3% on WTI. I mentioned HSBC. On the same day we saw that escalation, HSBC cutting its 2025 Brent crude forecast by 8% to $70 on oversupply. This market has been very, very focused on that one issue, oversupply.
That's because that has been the issue that has driven pricing. If you bet on geopolitics and potential disruption, you failed, because that's not the direction that things went in. And I think that people are just recognizing, look, you've got the U.S. producing more barrels of oil than any other country in history with respect to the shale patch. You have a situation where China's demanding less because of the EV transition, and you're seeing that more broadly. Where is that impetus going to come from to fulfill all of the supply, let alone questions around demand in a cooling, potentially, economy?
It's both supply and demand that's keeping a lid on these oil prices. The fact that supply is not being hit when it comes to this escalation. But to your point on China, Goldman Sachs yesterday also putting out a note. Our demand slipped further below our expectations. And that basically means you can have a recalibration of risk premium in the market, but there's going to be a ceiling.
Crude, 72.14. Under surveillance this morning, the dock workers' strike entering its second day with no end in sight. Container operations and auto shipments remaining halted along the eastern Gulf Coast. House Republicans sending President Biden a letter urging him to intervene.
They want him to intervene, and basically what they want him to do is come out and either upset rank-and-file union workers or potentially not come out, what they'll tell you behind scenes, and this becomes an issue for the economy. I spoke to Congresswoman Elise Stefanik yesterday in the spin room at the VP debate, and she wouldn't say, though, whether or not the president should invoke the authority he has to get union workers back for 80 days, but said it's a crisis of their own making. So certainly politics are going to play when it comes to this story ahead of a very important election.
Well, Donald Trump was even quoted saying that he doesn't want automation, and he wants the workers to actually be able to get what they want with the promise that there isn't going to be some sort of modernization at the port system. A real question here, and I'd be curious to dig a little bit deeper into just how much he is opposed to that. You hear the same kind of tone in terms of you need to get people together, but you need the workers to have power. At the same time, I was looking at what they're looking for. 50% wage increase over 6 years, which is a boost from an earlier 40%, and that would raise the base hourly wage from $69 to $69 from $39. Do you know that more than half of the dock workers earn more than $150,000 a year? So it's talking about what's required to get people in the door to actually do these jobs.
And they've got a lot of leverage right now, and they're going to use it, that's for sure. Let's keep the news right here in America. The U.S. Southeast facing a humanitarian, economic, and ecological crisis in the aftermath of Hurricane Helene. The death toll rising to more than 150 across 6 states. The Vice President, Kamala Harris, speaking in Georgia this afternoon on federal emergency response efforts. Look out for that. Elsewhere in the world of politics, Vice Presidential nominees J.D. Vance and Tim Walz facing off last night, the two taking aim at each other's running mates and clashing over key topics.
One thing that Joe Biden did is he continued some of the Trump tariffs that protected American manufacturing jobs. It's the one issue where Kamala Harris has run away from Joe Biden's record.
Well, Kamala Harris's day one was Donald Trump's failure on COVID that led to the collapse of our economy.
If Kamala Harris has such great plans for how to address middle-class problems, then she ought to do them now.
How is it fair that you're paying your taxes every year and Donald Trump hasn't paid any federal tax in the last 15 years?
Iran, which launched this attack, has received over $100 billion in unfrozen assets thanks to the Kamala Harris administration.
It's those that were closest to Donald Trump that understand how dangerous he is when the world is this dangerous.
Joining us now to discuss Bloomberg's Mike Shepard from the nation's capital in Washington, D.C. Mike, most neutral observers seem to believe that Senator Vance won that debate last night. Does it make a difference?
You know, it's a great question about what kind of impact any of these debates, even the presidential debates, have on people's minds when so many voters in this very divided nation have already made up their minds. And will it tip people one way or another? What they were really doing is trying to redirect their attacks at their running mates. And they really wanted to make sure the focus was on Donald Trump. We saw attacks from Tim Walz against Trump, declaring once again, keeping up the Harris line, that the former president is unfit for another term. And likewise, J.D. Vance trying to hang the albatross around Harris's neck of what he sees as failures on the economy, the border, and foreign policy of the past year. So in his view, why does she deserve another 4 years as president if it hasn't been so great in the Republican view as with her as vice president? So in a way, they are reinforcing the message and also trying not to make too many mistakes. For Vance, it was also a moment where he could sand down some of the edges that we have seen surface in some of his social media and also public appearances on TV, where we've seen a little bit of a harder edge that has weighed on his favorability. Meanwhile, for Tim Walz, this was more of an introduction nationally to the public. And he was a little bit nervous and halting at times. And it's a sign that he may need to get out there a little bit more and do some more interviews.
Mike Shepard, down in Washington. Mike, appreciate it. I think a lot of people felt that way, that you could see that Governor Walz hadn't been getting reps on the weekend shows, that he'd been hidden for so long over the last few weeks that he wasn't used to having that kind of debate with Senator Vance.
He definitely came across as very nervous, especially in the beginning. His best performance of the debate was at the very end. And also, I think he was nervous because how much you saw basically just his forehead, because he was constantly writing down on these two shots instead of what J.D. Vance did was really look at him and have that presence.
Rob Casey's with us now of Cigna Global Advisors. This is what Republicans have been waiting for. They've been waiting for someone to prosecute the case, to tie the vice president to this current administration. Did Senator Vance do a good enough job?
Yeah, I think he did. I think since the Republican National Convention, we've all been looking at each other saying, you know, why is J.D. Vance on the ticket? He hasn't done very well. I mean, he's okay in interviews, but he's not great talking to voters. He's not great in those more informal interactions. He's really good on the debate stage, right? He's an Ivy League lawyer. He was in private equity venture capital. Now he's a politician. I mean, he's a pretty smooth guy.
Frank Luntz, who's a well-known pollster, definitely leans Republican, but well-known pollster, he had a focus group where only 5 individuals were leaning towards Trump-Vance going into it. After the debate, it ended up 12-2 in J.D. Vance's favor. Could this move any voters in the swing states?
You know, I don't think so. Maybe a presidential debate moves a few undecided voters. I think a vice presidential debate, not so much. Now, what we've seen in history is even some of the worst vice presidential candidates, I mean, thinking about Sarah Palin in particular, actually wasn't much of a drag on the ticket. Now, J.D. Vance is actually less popular, more unpopular than Sarah Palin was. He took a step, I think, last night, improving his standing. He's more popular now than he was yesterday morning, but I don't think he's convincing anybody to vote for Donald Trump just because, 90 minutes he was able to hold his own.
What do you think was the most impactful moment both sides were able to deliver? And then, of course, they're going to, spread this out on all their social media channels.
Yeah, well, I think for Democrats, what they're going to share most frequently, most often over the next few days, is the fact that J.D. Vance was not willing to say Donald Trump lost the 2020 election. I was surprised by that. I thought he probably would have had a better answer to that question. For Republicans, I think they're going to want to share just about the whole debate, right? J.D. Vance made the case time and time again. He looked much more prepared than Tim Walz. He looked much more at ease on the debate stage. And he was really able, much more effectively than Trump did in the first presidential debate, to tie Kamala Harris to the economy and the border over and over and over, regardless of what the question was about. The answer was about Kamala Harris, the border, the economy, and how she has been vice president for 3.5 years and hasn't enacted what she's now promising.
We didn't hear about people eating pets. We didn't hear some of the other accusations. This, according to Punchbowl, it was like watching a sepia-toned debate out of the 1990s, lots of talk of policy and legislative politics. Yes, let's dig in. Do you feel like you got a better understanding of what the policies were and sort of the overtones of how they would be implemented for each of the candidates based on this debate?
Well, I think Mike Shepard was right in saying that neither candidate wanted to make many mistakes. So they weren't willing to really nail down into the nuances of the policy that the presidential candidates are offering. But, I'm not surprised that Punchbowl is happy to talk about legislation, right? This was a policy debate. It felt like a little bit more of a throwback. And I have to say, it may be that the most important contrast that came out of last night was how nice is it to have a debate where Donald Trump isn't on the stage, right? It wasn't necessarily between Vance and Walz, although I think fair to say Vance won last night's debate. It's really nice to be on the couch for 90 minutes, listening to politicians talk policy, cordially, sometimes competitively, but it was nice to not be listening to Donald Trump.
Do you think that Donald Trump liked this debate? Because that's been sort of a big question with J.D. Vance and how much he's catering to the running mate or how much he's actually presenting his own views.
Yeah, I think he did like the debate. Now, I did see some commentary on Twitter last night that sort of suggested that J.D. Vance wasn't doing enough to defend Donald Trump, per Donald Trump, or at least people think about how Donald Trump might view the debate. The thing was, we've all been sort of critical of Donald Trump's decision to pick Vance in the first place. I think last night was the case for why J.D. Vance is the right running mate for Donald Trump, right? He's unpopular. He's increasingly unpopular throughout the campaign. He's had a pretty bad rollout, but he's a great messenger and spokesman for sort of Trumpism generally. And I think he's a pretty obvious, inheritor of that brand when Trump either wins and then steps aside or steps aside in January.
Just quickly, 1 month left. Was that the last debate?
Yeah, I think so.
Yeah?
Yeah, okay. I don't think either side wants to get back on the debate stage. It's weird that the final, public national word is going to come from the vice presidential candidates. But I think Harris is happy with her first performance, and I think Trump is, he'd rather be tweeting and truthing than be on a debate stage.
Rob Casey of Signum Global Advisors. Rob, appreciate it. Thank you, sir. Check out this move in the FX market. Dollar yen popping higher, 144.56. Comments from the Japanese Prime Minister just moments ago. Not the environment to raise interest rates again. Not in the environment now to raise interest rates again. Bear in mind that when Ashiba came on board, we were talking about a man who was supporting the normalization process over at the BOJ. Those comments counter that view in a big way.
And we heard something similar from Ueda talking about, we need to take our time and be much more supple with our policy. You heard that earlier today. He said he wants to coordinate Ashiba